Good morning, everybody. Welcome back to another episode of the Market Open. We are live. It is Thursday, July 23rd, the first day after the official start of big tech earnings. We had Google, we had Tesla. We've got a lot to talk about those two companies. They are down in the pre-market, and they're down in a pretty aggressive way, given the size of those market caps. Wow, I did not even know Tesla was down 7. I actually haven't looked at that chart all morning. I thought it was down 4. Tesla is down 7.6. I know Google is down 5, which already is a lot, 5.1 right there. And as a result of Google and Tesla falling based on those earnings, which we will have a lot to dive into to discuss those earnings, you are seeing the broader equity market take a big hit. Obviously, the Max 7 comprise of around 30% of the S&P 500. So if two of those Max 7 take a 5 and 7% hit, you've got the S&P. That is down almost 1%, 0.88 in the pre-market. But it's not just Google. It's not just Tesla. And we will talk about ServiceNow. We will talk about IBM. ServiceNow right there up about 5% in the pre-market. It is also what is going on in the macro, what is going on geopolitically, what is going on with bond yields, what is going on with oil prices, because, well, this is actually, to me, a bit more concerning than Google and Tesla. Unfortunately, we have officially seen, for the first time since June 1st, oil prices head over $90 a barrel as you wake up this morning. There were some tweets by Mr. Trump that were a little, let's just say, not nice. And as a result of that, the market is once again interpreting the escalation as being a bit more aggressive, and that escalation has started to result in oil prices starting to climb up. And it's not just oil prices, unfortunately, it's the 10-year as well. 10-year treasury right there at 4.7%, as a lot of you guys are saying. That is kind of the bigger concern here that I think most of us have been keeping an eye on. And now that 10-year is yielding 4.7%, I mean, you know, it was at 4.3, 4.4, has been ticking up above 4.5. 4.6 over the past couple of weeks, now at a 4.7. It is very concerning because the idea of that going to 5%, it would just be unsustainable. It would not be practical. It would not make sense. The Fed would theoretically have to get involved. But can the Fed get involved in any meaningful way? Because they don't really want to raise rates. As you know, Kevin Warsh has hinted he's not trying to, but other Fed members have. So there's just a lot to get into in terms of the nuances of what's happening. It's not that easy today, it's looking like, to determine that this is going to be red or green simply based on like semis going up, software going down, because unfortunately the semis are not really pumping, even though what Google said yesterday would make you think they should be pumping pretty aggressively right now, given the CapEx estimations that Google put out. But it's also like, all right, well, can semis actually go up and have that high beta momentum come into fruition if oil is at $90, looking like it's actually at almost $91 right now, and the 10-year is pushing 5%? Like, it doesn't seem as practical, which is kind of the issue that we're having right now. So got a lot to talk about, got a lot to dive into. We have a ton to discuss from yesterday. Nokia had earnings this morning as well. They were kind of okay, kind of not the best. I mean, there was good growth in AI services and everything else. There wasn't that much decent growth, and that's why the stock is kind of flat. Then obviously we'll go deeper into Google, Tesla. Yeah, the USD over JPY is at 163 right now. So you got the yen that's spiking, which is also not the best thing for the markets as well. Okay, so let's get into it. Now, I am trying to share a screen, but for some reason, StreamYard is being very, very weird. Never mind. Now it's working. Okay, cool. So let's pull up a few of the things that we want to pull up. Good morning, good morning, good morning. Thank you, everybody, for being here. Let's get started. I think let's get straight into Google. Let's get straight into Google. That'll kind of set the premise for everything we got going on, and then we will get deeper into Tesla and some of the stuff that's going on in the macro. Again, good morning to everybody. Here is the biggest chart that we have to look at when we talk about Google. I mean, this is an incredible chart to look at. This is the reason why, if you are levered into semis, you've been having a very, very good year. And if you are in the Max 7, you have not been having the best year. Google has reported its first quarter of negative free cash flow for the first time since 2004. I mean, it looks kind of crazy when you see this chart, but they are a negative $5.8 billion of free cash flow. This is a company that would be buying back $5.5 billion of its stock every quarter. Now is going negative in terms of free cash flow. Now, in order to get the results that Google is getting, it's obviously justifying the free cash flow or the negative free cash flow by showing these numbers, which are pretty freaking incredible numbers. And it's the fastest acceleration of growth that the company has seen in 5 years. Revenue up 24% year over year. Search revenue up 17%. This was 8% a year and a half ago. Cloud revenue was at 82% year over year. It was at 63% 90 days ago. Operating income, 8.8 billion. Operating income, or that was for cloud. Operating income for the whole business is up 30% year over year. 40 billion. Net income, 112 billion. That's up 300% year over year. Gemini app now has 950 million monthly active users, and Gemini models are processing 22 billion tokens via their API per minute. This is obviously incredible growth. This is what you want to see. If you're a Google investor, you're happy with this quarter. There's nothing in this quarter that's a red flag. They have $517 billion now of remaining performance obligations. That number was $467 billion 90 days ago, and they are estimating that 50% of that RPO will be converted over the next few years, which means you have another $250 billion from that RPO going into actual revenue. So every kind of core element of the business is doing incredible. There's nothing that's wrong with the business. There's nothing they reported that would make you believe that the stock should be down 5% right here. In fact, this is the most important slide from the business that we got last night. Operating margin on cloud went from 20% to 35%, meaning they are monetizing the growth that they are getting. The growth went from 32% to 82% on cloud. Instead of doing 13 billion in revenue, they're doing 24 billion, and they're doing 8 billion in operating income versus 2.8 billion. So the level of growth in the part of the business that is justifying all the CapEx, this slide right there that you're looking at, this is the reason. It's on the screen. It's happening right now. So then you may be saying, well, why is the stock down? And more importantly, why are all the sell side analysts lowering their price targets? As you can see right here, they all still think you should buy it, but Cantor Fitzgerald, JP Morgan, Wells Fargo, Oppenheimer, Morgan Stanley, Piper Sandler, Rosenblatt, UBS, Melius Research, they all declined their price targets from 5 to 8%. Why? Well, the reason why is because Google said one thing on the call that pretty much determined the extent of what would happen to the stock after the call, which is they raised their CapEx from 190 billion to 205 billion. Now, you may be saying that's not that big of a deal. It's another 15 billion. It's not that serious. The problem is they did not disclose the 2027 CapEx, and they did say it will be significantly more. UBS and JP Morgan came out with a report yesterday estimating that they think Google is going to spend 350 to 375 billion in fiscal year 2027. If Google said that yesterday, I think the stock would be down a lot more. So I think investors are trying to digest and stomach what significantly more means, but significantly more obviously means a lot more than $205 billion. And so the semis loved it after hours, although the semis are not loving it too much right now because of the oil problems and bond yield problems that we're having. But that's the story, right? Everyone going into this print was like, all right, Google's got to raise CapEx. If they don't raise CapEx, we're going to be screwed. Well, they raised it, and they vaguely raised it for 2027. But the problem is the street doesn't know if that's a meaningful enough raise to be excited about or be scared about. And I think genuinely, I don't think the street knows if they want the CapEx increase or not. Because on one side, which is the bullish side, you're seeing the revenue growth, the operating margin growth, which means the ROI. Everyone says, where's the ROI from AI? Google is showing you the ROI from AI happening in their business. There's nothing you can look at from the numbers and deny that they're not getting a return on investment. But they did go negative free cash flow. And if that negative free cash flow, like, are they going to go negative 30 billion free cash flow next year? Are they going to go negative 70 billion in 2028? Like, at what point do investors say enough is enough? We like the AI business, but we don't like it to the point where you're spending this much. And at what point does Google say, well, if you want us to continue our next leg of growth to become a $10, $15 trillion company, we're going to have to spend this money. And so right now, I don't think there's enough of a agreement or a consensus between the market and, the Max 7, which is why Meta, Microsoft, Amazon, all of those are down, because obviously they're going to be spending like crazy. Meta's down 2.4%. If Google just said they're going to be spending significantly more, Microsoft down about 0.5%, and then Amazon. So Meta, Microsoft, Amazon, I think are going to have amazing quarters, but it kind of doesn't matter. Amazon, they're back below 240, down 3% pre-market because of the uncertainty of this CapEx spend. Nebius was up last night. Micron was up last night. CoreWeave was up last night. But now we're getting into the part of the cycle where the market's like, okay, so the CapEx spenders, they deserve to go down because they're going negative free cash flow. The CapEx beneficiaries, they should deserve to go up like they have been over the past 6 months because they're getting all that free cash flow, which is turning into earnings per share for them. But we are concerned about a bunch of macro stuff. And we're also concerned that once Google turns off the CapEx spend, which maybe it's not going to happen now, but it's going to happen eventually, the business models for the CapEx beneficiaries is going to shift so dramatically because they're just not going to have access to all that capital. And at some point, investors might, if Google falls by 40%, like just something crazy, are investors going to demand that they stop spending on the CapEx? Now, granted, why would they fall by 40% if they're growing at 80%, right? So there's still all these nuances here that I don't think we have answers for. But at the end of the day, it was an exceptional quarter. If you're a Google shareholder, you just can't be mad about the quarter that we put up. The problem is the CapEx spend, which is not even a problem, but in the eyes of the market and the perception of the stock price's reaction to how the quarter was reported, it is a problem, which is why we're seeing the pain that we're seeing right now. On top of that, let's do some quick macro real quick, and then we will get into Tesla, because Tesla earnings were a whole different ordeal. But if you're a Google shareholder, and put in the chat, are you upset about this Google quarter or not? Because I would imagine you just can't be, given how good the numbers were. Obviously, the stock price is a bit disappointing, but we all kind of knew if they spend a lot on CapEx, the stock price is not going to be treated fairly right here. Crude's at $90.93. It's up 5 cents or 5% right now, which is not the best. The 10-year right here is at 4.7. The 10-year right here is at 4.7 as yields are going higher and as oil continues to go higher as well. As Chad also says, I love it when Amit talks in first person about companies he doesn't work at. Every earnings I report on, I basically am saying, we had a great quarter. It's like, but technically, if you own a part of the company, you are part of that. You are part of that special we. Just not the type of we that's actually doing the work in the company. But nonetheless, 10-year at 4.7, Google down 5%, oil at 90 kind of makes sense because for the past few weeks, oil was up, stocks were up, commodities were up, currencies were up in terms of the Japanese yen, and the 10-year was up. Something had to break. And I think this tweet today also allowed stocks to break a little bit while the 10-year and oil shot up. Trump right here about 30 minutes ago. A year ago, the United States of America attacked very powerfully the Houthis for their interference with commerce and trade by shooting at ships. Since that time and during our conflict with Iran, they've acted very responsibly. Unfortunately, now they are starting up again, shooting at 2 Saudi Arabian ships last night. Please let this truth serve to represent that if they do this again, the U.S. will hold Iran responsible in that the Houthis are a surrogate and or proxy of Iran, and major military punishment will be inflicted upon Iran and, of course, the Houthis themselves, who I am very disappointed with in what they have until now acted very professionally and smart. Thank you for your attention to this matter. So this is very similar to what Trump said yesterday, which is that if Iran shoots at any ships, they will have the United States will bomb a power plant or a bridge for every ship that they shoot at. And so it's kind of the same warning that Trump is coming out with this morning, which is that, hey, we are seeing that they continue to shoot at these ships. If they continue to do this, there are going to be more consequences. I think that, along with the CapEx spend from Google and the negative interpretation on the stock, basically got the market to say enough is enough. This 10 years got to go higher. Oil's got to go higher. And then you had a really good piece of news, but unfortunately, I think this also got the 10-year to go higher and oil to go higher, which is that jobless claims came out. The street thought we would have 211,000 people in this country file for unemployment. It was only 187,000. That's a significant, usually it's like 203, 205, 210. It's usually a 1 to 2,000 delta between the expected versus the numbers. This is almost 30,000. And so the market's like, okay, the labor market is not having any concerns based on the aggregate macro data that we're looking at, which means, guess what? Not only do people have jobs, people have money because they have jobs, which means they're going to spend it. So part of the reason the retail sales has been so strong and the consumer has been so strong, you had American Airlines, you had Pepsi, you had all these different companies come out over the past couple of days say that, hey, we think the consumer is fine, is because they have their jobs, which is fine. That's a good thing. That helps the economy. The problem in the eyes of the stock market is, okay, we've got this inflation crisis because we've got this geopolitical issue. The geopolitical issue is affecting our bond yields. Our bond yields are affecting our stock market. Now you're telling us that everyone has all this money that they're going to just go out and spend. How does inflation not go higher? And I think that's also a question the Fed is struggling with, which is why so many of the Fed participants, although I disagree with them on raising rates, are saying, look, we don't see this crisis ending anytime soon. And I think if oil was still at 65, like it was back in June, oil is up 25% in a month, then maybe you would have some of the hawks in the Fed be like, okay, cool. We've had a month of oil, back to levels that it was at around January, February. We can kind of chill with this. If this lasts for the rest of the year, there is absolutely no need to hike. Well, now we're back to 90. And so it's like, well, are hikes back on the table? And I think stocks might also be pricing in that if hikes are back on the table, that's not good for growth stocks, especially growth stocks that trade at higher multiples, like a lot of these semiconductor names. This is what Trump said in his press conference, or not press conference, but in his rally yesterday about the stock market and Iran. in Georgia. Then we'll talk about Tesla.
And the stock market has said, and that's with this skirmish we have going on. I call it a skirmish. This is with this skirmish we have with the Islamic Republic of Iran. And I call it that because let me tell you, they're getting hit so hard and they want to make a deal. But I say they're not ready to make a deal because every time they make a deal, they want to change it and everything. They're not ready. They'll be ready very soon. And this is despite this. It's going on. The stock market has hit 73 all-time highs since the election. Think of that. And the typical American's 401k is up by $34,000, setting records day after day. It's up by numbers that have never been seen before. So your 401ks, they always say, oh, the stock market. Stock market's very important. But I have people coming up to me that have 401ks. They said, you know, I was a disaster. My family wouldn't talk to me. They thought I was a total loser. And now I'm like, the one guy said, I feel like Warren Buffett. No, the markets are right through the roof. And it's a beautiful thing to watch, frankly. It's beautiful. It's brought families together. I mean,
So, you know, you got Trump looking at the Dow Jones, the S&P 500, and, you know, quite frankly, obviously, it's been a little bit of a ugly past 20 days in July, but that's really been for the semis. I know they've started to kind of recover. A lot of them are still down. Software and hyperscalers, it's been ugly for them all year. The S&P 500 is still up about 9% this year, and it's only midway through the year. So you can't really say that, like, the market's not doing well. It's just there are so many bifurcated elements of allocation of capital within this market that are levered up in certain areas, that those are the parts of the market that have obviously taken the biggest hit over the past few weeks. But the market itself, you know, is still up. So Trump's argument is just like, you know, people are like, oh, Trump is causing the market to go down. I think he's like, well, oil's at 90, the 10 years at 4.7. We're still in this escalation with Iran, and this S&P's up 9% this year. So I think he's feeling the market's giving him the liberty to not necessarily have to stop the war anytime soon. Now, if that 10-year starts creeping over 5%, that 30-year starts getting to 6%, we've got some deeper issues because the credit markets will react. And then obviously the stock market probably has to react in a much more negative way across multiple sectors, not just semis. You know, but as of now, that hasn't necessarily happened yet. Tesla, let's talk about it. Tesla right here, down about 7.5%. Before we get into Tesla, real quick, one more thing I want to say about Google. So Google's EPS beat, a lot of people were asking why was the EPS beat so big and how the market didn't react to it. The market wanted $2.93 on EPS. Google brought in $9.11. The reason for that was because they disclosed a $94 billion SpaceX investment in its SEC filing. They only put in $900 million on that investment in 2015. So absolutely incredible investment from Google. 2015 to 2026, they turned $900 million into $94 billion. However, $80 billion of that $94 billion is subject to short-term IPO lockup restrictions, which means they can't sell. And another $14.1 billion, which is the remaining elements of that stake, is locked up through Q3 2027. Now, the interesting thing about this is this $94 billion assumes that SpaceX is worth $1.77 trillion. SpaceX right now is worth $1.5 trillion. If it obviously falls even further, you know, that $1.77 trillion valuation is not going to stand up to be what it is. So if SpaceX actually goes down, Google obviously will still have an amazing investment on their hands. But that EPS number is not going to look as good because, you know, their gain on unrealized equity is not necessarily the accurate. Also, if you take away the SpaceX and Anthropic stake, they actually missed on EPS, 285 versus 290. Not that big of a miss, but the point is that SpaceX stake was really important for Google. But it was also really important for Tesla. Let's get into Tesla's earnings. Revenue up 26% year over year. They did beat on revenue. EPS they missed, and they missed badly. Street wanted 51 cents. They came in at 33 cents. It is negative 18% year over year. This is a stock that trades at 300 times earnings, and it's not growing earnings. In fact, it's declining earnings 18% year over year. The kicker here, speaking of SpaceX, is out of those 33 cents of adjusted EPS on Tesla, 22 of those cents are because of a $1 billion stake in SpaceX that they were able to generate based on them investing a few years ago, which means about 70% of their adjusted EPS was literally from a gain on an investment, had nothing to do with the business, and that still had EPS down 18% year over year. So you can understand why the stock is down 7%. The street's looking at these numbers and they're like, oh man, there's not much to be excited about here. Gross margin, 16.8% versus 19.4%. That's down 41 bips year over year. Auto margin, 16.3 versus 18.1. That's down 310 bips over year. Free cash flow was actually good. The street wanted negative $3 billion. They came in at negative $1 billion, so it was a little bit better than expected. But on operating margins, the street thought it would be 5.4%. They came in at 1.4%. I mean, it, kind of looks like a car company when you look at these numbers versus a tech company. So then what did Elon say during the call that really got the street to be upset? I don't think the call was horrible. I don't think, Elon was horrible on the call. His mic was acting a little weird compared to the other people that had mics, so the audio was a little hard to hear as the S&P falls below 740 right here, pre-market 739.96, down a full 1%. The problem with Tesla right now is that the biggest thing to get excited about is Optimus. And Elon, I think, sobered up a little bit in speaking about the ability for Optimus to meaningfully result in any, fundamental revenue or earnings growth. He spent a good 5 minutes on the call saying, look, guys, this shit is hard. It's not easy. Like, we are very excited for Optimus, and, we're shutting down, building different models to make room to build Optimus. And we think we're going to be able to build it at least starting by the end of 2026, but it is the hardest problem in the history of humanity to solve. So he really spent a lot of time making sure people understood how crucial it was to solve it, but how hard it is to solve it. And to me, if you read between the lines, that's him saying, hey, guys, cut me some slack here. It's not going to happen overnight. If we figure this out, we're going to be worth many, many trillions. So hold on for the ride, but don't expect it to be figured out by 2027, primarily because the AI has to get good enough for a robot to either be in your home or be in a factory and produce meaningful work. Elon made the point to say that no robot company is able to get a robot to do any level of generalized work. I think there are some startups that would disagree with that, but the point is, he is right that at scale, a lot of these companies haven't been able to do this. And even if they can do, generalized work, they haven't been able to manufacture them to the point where a Figure or an Apptronic or an Agility Robotics is shipping hundreds of thousands of robots per year. And you're going to need those economies of scale for those robots to be profitable in any meaningful way. So yes, the revenue on FSD is nice. The overall trajectory of deliveries and production wasn't bad. It was actually up year over year. But the problem is none of that is really coming down to the bottom line. Like, literally none of it's coming down to the 10 cents of profit to the bottom line. The margins aren't what was expected. Elon said CapEx will continue to accelerate for the next 2 years. So they're going to be spending a ton of their money on CapEx as well. And then Terafab, which is like the real exciting thing about Tesla, they didn't talk about. They said it's too big of an update to talk about, and so we'll do a different call in the future to discuss it. So I think the market's just looking at the earnings and they're like, all right, if we're not going to buy Google because they're spending so much on CapEx and Google's growing 82% for the, thing they're spending all that CapEx on, why are we buying Tesla if they're not growing at all in any meaningful way? And that's why Tesla also had across the board, like Google had some price target raises today, but Tesla had full downgrades across the board. Cantor Fitzgerald, TD Cowen, Mizuho, Morgan Stanley, Jefferies, Truist Securities, Goldman Sachs, they all downgraded them in terms of their stock prices. And Truist was the most aggressive by taking the stock price down from 430 to 370 in terms of their target. Average was about 6 to 8% on the downside in terms of what they think the stock will be worth. So Google crushed it. Stock is down. Tesla did not crush it. Stock is down. The overall trend right here is that there's a lot of volatility within oil, and the 10-year oil now at 92 as it is touching that level in the pre-market. And the semis are kind of confused. I think all the semis should be pumping right now if Tesla and Google just said they're going to spend a ton on CapEx, because Microsoft, Meta, and Amazon are going to say the same thing, but they're not because of different macro issues. And like NVIDIA, it was, pushing 215 for the first time in a month yesterday. Now it's right back to 208. Like, why? Google basically just hinted that they're going to spend hundreds of billions of dollars on CapEx. Why is NVIDIA down? I don't know. But at some point, I think if something's breaking in the macro with the 10-year or oil prices, every stock is subject to take a hit, not just software, not just semis, and not just the Mac 7. So that is what we got with Mr. Tesla and Mr. Googs. Broadcom also down because TSM and NVIDIA are getting hit right here. There's Broadcom right there down about 1.675%. All right, ServiceNow. They had a really good quarter. ServiceNow right here down about 5%. It's basically getting back everything it lost during the day yesterday. Many of these software names ended up taking a hit yesterday because of Pegasystems and their earnings. Very similar stuff to what IBM said. So all the software names got hit. But ServiceNow ended up having a really good quarter. So Jefferies raised their target to 140. with a buy. The firm cited beats in constant currency RPO, subscription revenue and operating margin, stronger net new ACV supporting the upside despite some benefit from deal timing. The biggest thing I think ServiceNow did outside of beating on the top line metrics was they made sure to raise their guidance. And the raising of the guidance was really important because many of these software companies have not raised guidance in any meaningful way. I mean, Palantir is the only one that hinted that they're probably going to grow 100% next year versus 85% last quarter. And, even that wasn't enough to get the market excited because the software algos are so against these software names at the moment. So ServiceNow needed to at least say the stuff that was necessary to stop the bleeding on the stock. And I think that's what they were able to do. Total revenue, 3.9 versus 3.92 billion. That's up 24% year over year. Subscription revenue was up 24.5% at 3.8 billion. Adjusted EPS, 90 cents versus 85 cents, 35% free cash flow margin. They raised their subscription revenue guidance to 15.78 billion. The most important thing for ServiceNow was that they acquired a cybersecurity company a few months ago, which actually hurt their gross margins for the incorporation of that acquisition into the core business. And it's working out. It's working out in a meaningful way. They are now the 8th largest cybersecurity company on the planet based on that acquisition that they made a few months ago. And I think that's actually the hidden angle for how this stock starts to get higher. The only stocks that have diverged in the software space from all the other names are CrowdStrike, Palo Alto, Zscaler, et cetera. And that is because of the influence of Mythos and the idea that, you need all this cybersecurity spend. I don't know if that's absolutely going to affect ServiceNow, but perception-wise, that could be something that the market holds on to give it some momentum if they can show that cybersecurity growth coming into the business. Bill McDermott, he crushed it on the call. He was very excited. He sounded like he knew his numbers were strong enough to be confident in the results that they were showing. And they asked him, hey, why aren't you seeing the same CapEx IT budget dislocations that a company like IBM is seeing? And he basically said, essentially, we are an important company and companies are going to think twice before they stop spending with ServiceNow. And I think that's the exact same thing you're going to hear from Alex Karp when he gets questioned in a few weeks. Are you seeing the IT spend shift into hardware versus software? And I think he's going to be like, you know what, we're an important company. Maybe some of those other software companies can't convince their customers to continue to pay the enterprise contracts that they're obligated to pay. But for us, we probably don't really have that big of an issue for it. ServiceNow's numbers don't show that. Those numbers are going to show that their software is actually. There are cream of the crop software companies that I think are going to do very well. The problem is if you have oil up, if you have the 10-year up, and then you have this CapEx headwind across the entire market, I don't know if these results are going to be respected. Now, maybe the semis take a massive hit and then the software names go up, but that doesn't really make that much sense because Google's spending so much on CapEx. So if Google's going to keep spending on CapEx, Google now down about 6% of the pre-market right here getting hit, you would think the semis go up. If the semis go up, the software names have to go down. And so there's all these, again, weird, nuanced narratives fighting with each other to try to figure out, what's going to win and how the market's ultimately going to react to this. But that is what we had with ServiceNow. We are going to see what happens with Google when the market officially opens. Obviously, the street doesn't like it. We talked about why their CapEx spend is what's hurting the free cash flow estimates for this company. Apple right there, 324, and Tesla down about 8%. Nokia. So these earnings were relatively good in the AI space, but they weren't that impressive in the other parts of the business. Now, granted, if you're buying Nokia, you're not buying it for its legacy business. You're buying it for their AI and cloud sales. And this was the most important thing. So Nokia reported 2.8 billion in AI and cloud orders in Q2, up from 1 billion in Q1. Related sales rose 105% year over year. Comparable operating profit reached 434 million, above the 382 million estimates. And Reuters reported that shares were up 6% after results. The stock is now up around 2%, not as much. The problem with Nokia is, although the earnings were actually very strong in the parts that matter, not necessarily their net sales, which was up 9% year over year, not even necessarily their gross margins, which was up 70 basis points, or their operating margins, but more importantly, those AI and cloud sales that was up 105% year over year. The broader problem is if all the semis are down because of whatever reason they're down for, in this case, it feels like more macro, Nokia's not going up. BlackBerry's not going up. The neo clouds are not going up, right? Like all these companies that are derivatives of the broader AI trade, they're just not going up if the core semiconductor names are not going up. And right now, the core semiconductor names, I think, are confused on if they deserve to go up or not because the CapEx says they should be going up, but the broader market maybe thinks they should not be going up. And so I think that's the issue with Nokia right here, even though those earnings were relatively strong. in and of itself. Same thing with AMD. They have their event today, so that'll be really important to see. They announced the Anthropic deal. I mean, that Anthropic partnership wasn't really enough to get the stock to explode. Granted, the stock has already exploded so much this year. So it's also one of those things where like a lot of these names are up. They're a bit tired. I mean, Google, again, 140 lows last year. It's not like Google has underperformed as a large cap tech company. It's up double in the past year. But if they're going to be spending that much on CapEx, yeah, the stock is probably going to be taking a hit. And I think this was the most predictable thing that many of us thought yesterday. Was Google actually going to go up 10%, often saying that they're going to be negative free cash flow, which is basically what the CFO guided for in 2027. They didn't literally say it, but they said, we think there's going to be some pressure on free cash flow because of opportunities we want to capitalize on, which is the corporate way of saying do not expect free cash flow, buybacks, or dividends because we need to spend on CapEx. And unfortunately, that's why that stock has taken a hit. So that is what we got with Mr. Googs. The Qs are probably getting hit pretty badly. Up the Qs right there down about 1.5%. I wonder if this market shifts at open and this is just a little pre-market game that they're playing with us. Tesla feels a bit more aggressive, but there are plenty of buyers for Tesla when it gets this low. Google is now well below that Berkshire price, which is kind of interesting because it's almost like, Berkshire is run by smart people. Did they not realize Google was spending it? I mean, there's no way in hell Berkshire didn't know that Google was going to increase their CapEx. Like at that stage, when you're investing that much money and you're so intimately involved with the C-suite, you know what the plans are, either explicitly or implicitly, which means Berkshire must have assumed it's okay for them to spend that much CapEx because we think at 350 we're getting a deal. Now, granted, the way Berkshire normally operates is they want the lowest price possible. They don't like DCAing because they're too big of a company to just dollar cost average. So the smart people at Berkshire must have come to the conclusion that even with the equity dilution of $85 billion, even with the increased CapEx, which they obviously had to know about, this stock's terminal value should be $350. And now it's down below that, which is whatever. Stocks go up and down, but it's like, you would think that Berkshire would feel the stock should be below 350 if they agreed to buy 10 billion of the stock at 350, because if they thought it was going below 350, they wouldn't have agreed to buy 10 billion at 350. So this reaction right here seems to be the opposite of what, most of the smart people that have been touting Google's price to be. And now, what we're seeing the price actually at, which makes me curious. I'm like, do the dip buyers really step in? I mean, it's only $20 away from below 300. Below 300 psychologically would be a major level for Google. And I wonder if it gets that bad or if the market ends up stepping in. SMCI right there, that's also down about 1.34% in the pre-market. Are we down because of the war again? We are definitely down because of hostilities within the increased tensions of the war. So yes, I think that's part of the reason. Oil is above 90 for the first time in a month. The 10-year has crossed 4.7. I think that's the simplest way to explain why the market's down. But I also think the market's down because they're afraid of the CapEx. I mean, it's funny because like the past, month, the market has been down or at least semis have been down because they're afraid that the CapEx won't be enough. Now the CapEx is so much that the market, and it's explicitly, it's going to be in the hundreds of, Jensen is probably gonna be wrong about 3 to 4 trillion being spent by 2030. It's probably gonna be way more than that if this rate of growth keeps going up. And I don't know if the market likes that. Maybe it's just a one-day little hiccup, but that could theoretically be why we are seeing this pain. Why is there such a lag today, dude? A lot of you guys have been saying there's a lag. I don't know what's going on. I don't even think it's StreamYard. I think it might be something else. Like even the chat, you guys are lagging on the chat as well. It is so weird. I don't know what is happening today. Yeah, it looks fine on my phone. The comments aren't loading because I know it has to be backed up and like, no, now I'm paused. I'm like randomly pausing. It's not my internet. I can guarantee it's not my internet. So that's weird. Anyway, yeah, it's lagging. It's your comments all just loaded all at once. I'm telling you, it's not my internet. It's YouTube today. YouTube was having some issues last week. It is not my internet at all. So unfortunately, that might be happening. Yeah, YouTube needs more data centers. That's what we need to do. Speaking of data centers and, AI, trust me, it's not my internet, bro. It's not my internet. This is absolutely something with StreamYard or YouTube right here. It would not be my internet. Anyway, AI, data centers, Meta gets into the race. Meta is now launching an AI optimism campaign. Zuckerberg, some people will have you believe AI will make us less connected. That is going to leave us behind. We couldn't disagree more. Call us optimists, call us dreamers. Just as we've always done, we're betting on people. As we enter this next wave of within AI, we continue to believe the future is for everyone. We're focused on giving every person the tools to reach their full potential and making sure the benefits of technology are distributed to everybody. We bet on people when we are connected. We connected you to the ones you lost touch with. And again, when we connected you to the ones who couldn't be near. 22 years and 3.5 billion people later, we're doubling down because while technology will change, our intention behind it will never. Call us optimists, call us dreamers, call us whatever the hell you want. But we're betting on people and we like those odds. The future is for everyone. It sounds, yeah, it reminds me of like a John Lennon in the Imagine song or something. This was so weird for Zucks. Like Zucks never gets emotional and talks like this, ever. It's always just business updates. The idea that we need to be optimistic about AI and call us dreamers, call us whatever the hell you want, but we want to connect everyone. It is so weird. Like I was reading it this morning and I'm like, okay. But it speaks to a broader argument, which is an argument that I think we don't talk about enough. Like we mentioned it here and there, Penguin Solutions, that's down 3%, Cerebras also down 3%. But it is a very important argument, which is that not everyone on the planet cares or even likes AI. In fact, I would say there are more people than not that really aren't optimistic about artificial intelligence, what it's doing for the job market, wealth inequality, all that stuff. And I think Meta, Google, Microsoft, Amazon, especially when they have layoffs and it's tied to AI, they need to invest a lot in a branding campaign that makes people think AI is not a horrible thing. Because if they do, as Meta continues to go down 2% right here in the pre-market, 2.7% now, why not? Take it below 600. Why not? You're only $10 away. Let's just take it below 600. 680 to 580. Why not? $100 down in 5 days. Let's just do it. It's no problem, Meta. 609. Yep, $9 more to go. But they essentially have to prove to people that AI still matters and that AI is valuable, that AI is important. And if they don't do that, you're just gonna have a lot more people rebelling against the concept of AI. And unfortunately, I think that is the bigger issue. That is what is happening with Meta. And then when you have inflation going up, the cost of living going up, you add all that to this AI revolution. A lot of people don't want to hear about technology and all the amazing things that's happening there if they don't feel like they have a role to participate or if they think the opportunities are, taken away from them. So I think that's the bigger issue that we're seeing right now when it comes to AI. However, Jensen Huang disagrees with that. Here's some of the stuff he had to say out of that new Axios interview as we get into this market open.
Rhetoric is wrong and hurtful. I think that the people who are talking about this, in fact, got it fundamentally wrong.
So that you're saying the industry needs to tell a different and better, consistent story.
Exactly. But it's not just a story, it's ground truth. Just tell people the facts. The facts are we're creating millions of jobs.
So the industry needs to talk more and differently about the reality.
That's right. Don't create a narrative. Don't create a story that is made up. It is made up that there's going to be a singularity. It's made up that somehow we're living in a simulation. Yeah, these are all made ups. I think it's a fun story. I don't mind listening to it. And I even enjoying the narrative, when it's told by many of those leaders and my friends. And but we just all have to be thoughtful and careful.
So you're scared.
That's him throwing a little shade at Dario in terms of friends that are pushing that narrative. And then this is what he had to say about the ChatGPT moment for robotics, which I think is timely to hear given Elon said, robots are probably a little far away.
Great. When do you expect the ChatGPT moment for robots, when they'll be used and useful in the everyday lives of ordinary people?
The ChatGPT moment in 2022 was the moment that was not the moment that AI was useful. We had to wait another 4 years. ChatGPT moment was when we saw that it was interesting, that it did something surprising. And so if that's the case, then the ChatGPT moment of robots has already arrived. You could tell a robot, put the apple in the drawer. And the robot will actually reason about what is the sequence of tasks that it has to do, including opening the drawer before it puts the apple in there. It will reason about that. And when somebody sees that for the first time, see a mechanical robot actually doing that, I think it opens their mind about what the future of robotics can do. I think that the ChatGPT moment of robots has already arrived. Now the question is, when are we going to make it useful? And if we make it useful in the next 3 to 4 years, I would not be surprised.
We've moved.
So it's obviously going to take some time to make that happen. But Jensen also mentions 3 or 4 years, right? And if that is 3 or 4 years, then that's going to take some broader time in order for it to play out. Again, for those complaining about the lag, I'm sorry, but it's really not me. It's a YouTube, it's a StreamYard thing today. It is not my internet. I can guarantee it's not my internet. Refresh the screen, restart YouTube. That might help it. This was happening last week on a bunch of different streams. So hopefully it's going to go away soon, but it should not be the internet. All right, earnings. American Airlines, 15 cents versus 5 cents. They beat by 200%. Revenue, 16.7 versus 16.69. EPS is down 84% year over year. Revenue is up 16% year over year. That stock's down 4%. Unfortunately, if oil prices go higher, that's obviously not going to be good for the airlines. Lockheed Martin actually had a pretty damn good earnings. They beat by 11%, 794 versus 718 on EPS. Revenue, 20 billion versus 19 billion. Revenue's up 11% year over year. EPS is actually up 444% year over year. So you have LMT right there in the pre-market as that is up 5%. Now, again, you have that defense spending. You saw Ondas was up 10% yesterday. 1.5 trillion likely to be approved, 5.38% on Lockheed Martin right there. So the defense name's starting to get a little bit more love. Now, Lockheed Martin also pays a dividend. It's a bit more safer than some of these other names. But anything more high beta, software, semis, hyperscalers, those are taking a little bit more of a hit right there as Lockheed Martin continues to go higher. You also had T-Mobile. They beat by 15% on EPS, 299 versus 260. They missed by 1% on revenue. Revenue's up 8% year over year. EPS is up 5%. They have a big partnership with SpaceX. That stock is down 6.5% in the pre-market. None of these companies are beating none of these companies are missing on EPS. Many of them are missing on revenue, but it's an inconsequential miss. But it's very similar to what happened last year with EPS doing what they needed to do. And as long as EPS continues to scale at the level that it's scaling at, then that proves that the S&P forward multiple theoretically should expand. And it's just really hard, as Sam says in the chat, when oil over 100%. And that's why that stock is not really getting that much love. All right, let's do red or green right here in the chat and see what people think. 91.42 on oil. I would say conventional wisdom would say that oil is going to be a reason for why stocks might take a hit today, as this is the most amount of oil we've seen, or most amount of increase of oil we've seen in like a month, up 25%. But, then again, the CapEx is enough by Google, which should maybe be enough to get the market to be a bit more excited. Put the poll right there in the chat. Again, for the lag, I do not know what's going on. For a lot of you guys, it's fine. For some of you guys, it's not. You are going to need to refresh and see what happens. That's so weird. I can promise people it's not the internet. The internet has not had an issue since October 2025, when I realized I was on the 2.5 gigahertz versus 5 gigahertz. I was paying for 5 gigahertz, but they gave me 2 Wi-Fi passwords and I was using 2.5. It was so stupid. So once I switched to 5 gigahertz, everything was fine. So it's not my internet. Like I would be seeing it in my internet. It's not that. It's got to be something with YouTube today. Google's not spending enough they're spending too much on their freaking Gemini data centers. Not enough on YouTube. This is what we had for Tesla, by the way, their income statement. Again, operating expenses, the majority of that went into R&D. They still have a ton of cash on the balance sheet. It's just a lot of that cash is going to be going into CapEx. And if it's going to be going into CapEx, then obviously, it's not going to be helping for their free cash flow. All right, we got about 30 seconds until the market opens. Thank you, everybody, for being here. My internet is the best you've ever seen. You've never seen internet like this. If I could do his voice, I would be able to have a good impression, but I'm not good enough at doing his voice. Again, for those that are just joining, Google's down because they're spending too much on CapEx. Tesla's down because they're not growing earnings. The broader market's down because oil just surpassed 90. The 10-year surpassed 4.7%. You can't have all these things happening together at the same time. So the market's going to have to make a decision today, and we're going to see what decision they make and ultimately where they want to take these stocks. Thursday, July 23rd. Thank you, everybody, for being here. The stock market is now open. right, wake your ass up. Let's get into it. The S&P 500 opens down on the day. SPY is down. Wow. Okay, that's a little ugly. That's a full 1.13%. We just lost 740, folks, for the first time in, I think, about 3 weeks, or at least 2 weeks. 738 right there on the S&P. Meta down 3%. Google goes down 6 at the open. Tesla goes down 9. Holy guacamole. That is ugly. When's the last time we saw a 9%? It's almost 10%, 9.8% down day on Tesla. 337 on Mr. Tessie. ServiceNow's up 3%. Nokia actually flipped green. Nebius flipped green. I wouldn't be surprised if all the semis end up flipping green and they realize that Google's CapEx is actually bullish. Nvidia's down 1.4. Microsoft's down 0.5%. Micron is green. Palantir, unfortunately, getting hit with the software names. IBM is about to lose 200 for the first time in what feels like a long time. Yeah, it's been about a year since it was below $200. Palantir right there, 123.60. Reddit is up about 1%. Dell is up 0.5%. Dell was up 12% yesterday. CoreWeave is up 1%. Iren's up 1.43. Meta is going below 600. At least that's what it feels like. 608.82. As that stock is down 2.93%. The Qs are down 1.5. Robinhood, which was at 105 yesterday, is at 101.48. Let's see if that can at least hold 100, or if that's getting ready to potentially go below 100 right there. Apple down 1.12. ServiceNow and CrowdStrike actually flipped green. So cybersecurity holding on a little today. Netflix goes red again. Where is Mr. Tesla? A full 10%. That's like all at once, that candle. That's either a whale or an institution or a bunch of retail just saying, I'm done. Enough is enough. I need to put my money somewhere else, which, you know, it is what it is. Like, it could be happening. It's, you know, a lot of stocks had this same moment throughout the year outside of Tesla. If they just weren't performing, they weren't in the right sector. At some point, people get tired of it, and maybe this earnings was enough. But, you know, Tesla tends to get a lot of dip buyers come in on these really aggressive days. So I would not be surprised if people stepped in. We just got to see if that happens. Meta 606. Meta looks like, I think people are fed up with Meta as well. I think people are absolutely fed up with Meta. It's like every piece of news that you think is bullish for them, compute, building out, and, you know, an AWS type of cloud business, like nothing is enough to get this thing to pump up. And I also think the market's like, wait a second, Google just said they're going to spend a ton on CapEx and Google's down 5%. Meta's going to say the same. So why do we want to own Meta? You might as well sell Meta off right here before it tanks another 10% on earnings. Google right there down 6% on the day as Google's taken the hit. AMD's taken a slight hit, down about 0.5%. Texas Instruments, they had a good earnings yesterday. That stock also down 3%. Where's Bloom Energy? Bloom Energy is 219. That's actually up. So again, some of your semi-derivative names are green. CCXI, that agility robotics SPAC, I think that's down because Elon basically said robots are going to take a long time to happen. That's down about 1.84% as that one continues to take a hit. Amcor, that's down 1%. BlackBerry, that's down 1.3%. Ondas, that's down 0.33%. SanDisk, down 1.3%. Micron's actually green. So a little divergence right there. Oracle is red. The neoclouds should be liking the Google news, including Oracle. I mean, I know the OpenAI association is there with Oracle, but if Oracle can rent out that capacity to other people, not just OpenAI, then, you know, that capacity still is valuable to produce meaningful revenue. But the question is, does the market think they're too much of an OpenAI proxy right here? IGV, that's down 0.5% as that continues to get hit. Zeta's down 0.5%. Shopify, which was up 1% pre-market, that just flipped to down 2%. Again, the number one reason for why I think we're seeing these red candles, number one and two reasons are oil's above 90, the 10 years above 4.7. Last time we had the 10 year above 4.7, by the way, was April of 2025, and we saw what happened to stocks when we were in that range. It was not pretty. And, you know, Trump reacted. He took off the reciprocal tariffs or extended them by 90 days or whatever, and, you know, the credit markets calmed down. I don't know if Trump cares anymore because the S&P is up 9% this year. Maybe the S&P has to go back down 30% like it was in April for him to care about it. But the point is the stock market's up enough where I don't think Trump has to be like, yeah, I have to end the war because these bond yields are going up like crazy. Maybe he'll let the bond yields continue going up like crazy, which will obviously hurt the stock market. Nvidia down 1.4%, and then he might react. But he has the liberty, you know, when the S&P was down 30% in like a month, he himself probably was like, all right, enough is enough. S&P's up 10% this year. It's, you know, it's still not enough pain that I think would force him to act. And we know how much he cares about, the stock market being good, which is why that pain actually has an impact on him. 209 on NVIDIA. IBM still above 200, but very close to going down. Amazon, which was pushing 260 last Thursday, is now 236. That is down 3.5% because Amazon will also spend on the CapEx. And the market knows it, which is why I think this one is taking a hit. SK Hynix should be up today. That stock is up 4%. That actually makes sense for SK Hynix to be green. Same thing with Micron. ServiceNow, did we give up the pump? ServiceNow gave up the entirety of the pump, unfortunately. Software, I mean, look, I think the software stocks are cheap, but like, why would the market buy software when Google just said they're basically going to spend $300 billion on CapEx next year? Like, you would imagine the market easily says, okay, we're going to buy semis instead. But they're being selective, dude. Micron's up, Nebius goes red. I mean, not all the semis are making the move that you would think they would make. It was not I mean, pretty much all the semis are red except Micron and SMCI, which kind of looks like a fluke, to be honest. I mean, can Micron really go up 5% today with every other semi red? Marvell's down 1%, TSM's down 1%, Qualcomm's down 2%, Intel's down 1%, Nvidia's down 1%, unless the semis flip right here. Which, who knows? Maybe that happens. Where is Mr. Microsoft? We are down below 390. Microsoft's actually not doing as bad today as the others. Is anyone buying the Google dip? Down 6%. Is this compelling enough? Google's basically at the price it was at before Q1. It was around that 325 to 330 range, and then it pumped up to 400 in the coming weeks. And so it's kind of like 2 quarters of results are getting discounted given the stock price right here, down 5.7%. Micron up 2.8%. How about the photonics names? Your Lumentums of the world are green, as they should be. Coherent is green. I mean, Google's going to be spending a ton of money on all layers of the stack, and so will the other Mac 7. Netflix, that's down a little bit. SoFi loses 17. I see very few people saying they're buying the Google dip. It does feel kind of dumb, though, right? Like, if we think about it logically, they're going to take it down 5% because they're growing so much, the most they have ever have in a few years, right? 82% on cloud, 24% on the top line business because of increased CapEx. That CapEx is temporary. If anything, we should be buying Google on long-term sustainable growth, assuming the CapEx will eventually stop, which it will, and getting a discounted name that is going to continue to compound earnings because they're showing they can compound earnings through the ROI from their CapEx. But instead, the market is buying the CapEx beneficiaries, which has been the story the whole year. And even with the drawdown in semis, it feels like the market still wants, the company that's going to produce EPS results next month, not the company that's going to produce massive free cash flow in 2 years, which is, more of the Mac 7s. Broadcom right there, 393. That one's trying to flip green. Nebius going up is very good, as at least some of these names are getting a little bit of a rebound, but I feel like they should be getting a lot more of a rebound. Is anyone buying Tesla here? ServiceNow loses the pump. Tesla, are we down more below 10? Oh my goodness. We're down 11. Venus says Tesla sucks. I finally sold all of it. When was the last time we had an 11% Tesla decline? When was the last time Tesla stock fell 11%? January 2026. It had a weekly drop of 11% in March of 2025. No, in January 2026 was a 7-day losing streak. So January, it had a weekly 11% decline. March, it had a weekly 11% decline. Today's the first day, it seems like in about a year and a half, that Tesla's had a negative 11% move in a single day. In fact, in 9 minutes. So this is actually a pretty big deal for Tesla in terms of the downside momentum. Cerebras, that is down 2.4%. Wow, Trent Clark says, I also sold my Tesla shares. Yeah, this is interesting. The problem is when you get a lot of bearish momentum on Tesla, that tends to be the bottom, like just historically speaking, of the price action on this name. Having said that, the multiple is still pretty aggressive compared to, I mean, a lot of stocks that have high multiples in the broader SaaS and semiconductor space, they are growing earnings. So the one thing the bears can't say is that they're not growing. It's like, look, you might be paying too much of a multiple for it based on your fair intrinsic value, but it's growing. Like you can look into the future and see that growth evolve. For Tesla, you got to look into the future and really imagine where that growth is coming from because you're not seeing much evidence of it, at least in these earnings right now. Meta 610, trying to stabilize at 610 right here, bottomed at 605. It was $5 away of taking a hit. ServiceNow, again, I don't think there's a meaningful reason for it to go red at all, given those earnings, but semis go up, software goes down has kind of been the basis of this trade. Palantir, we still at 123. We were at 122. Just pretty freaking incredible. 120 has been where it's held up this whole year. So let's see if we go below back below 120. Oh wow, Keel back above 5. Okay, the data center name's actually getting a little bit of love right here. Nebius waking up. That means CoreWeave should be waking up as well. CoreWeave, yep, 83. It's just not all of the semi stack together is making the move. Iren should be up. Iren is up. Micron almost at 1,000. I mean, this actually would be the flip that most people predicted yesterday, that Marvell just flipped green. Okay, we are finally seeing the semis wake up a little bit here. Rocket Lab's up a little bit. Space Name's coming up. SMCI, that's up 1.7. SMCI was up 25%. The big thing about SMCI is not if it goes up a lot today, but if it holds the 25% move that it had yesterday, which was a massive move based on them doubling their margins from 8% to 17%. SpaceX also flips green as well. Oil 90.84 is what we're looking at on Mr. Oil, as around 70 or 68% of you said we'd go red today. The 10-year still chilling above 4.7. Iran's IRGC, any base used to attack Iran is a legitimate threat. Iran Revolutionary Guard say they targeted the Al-Adiri base in Kuwait. This is the actual weird part about any stock that's green today, to be honest. It's like in March, everything was red. Like there was nothing that was spared because of the war. In July, the market is selectively taking certain stocks red based on this CapEx narrative. But if the war ends up being like it was in March, with a geopolitical headwind across the entire market, then I wonder if everything just ends up flipping red. Which wouldn't surprise me, but also it would be surprising because, again, funds are going to rotate. Google just gave you the reason why to rotate with that CapEx. Amazon right there down about 2.73. Still seeing some green candles on the semi names. Tesla 332 it hit, then got some buyers coming now at 335. Let's see if it can actually get above 340. Palantir 122 to 123. Let's see if that one can also. Palantir was 126 in the pre-market, right? So a lot of these names are still well below their levels, but they hopefully don't have to go that much lower. Rocket Lab above 70. VG 1514. As that continues to go green. The space names actually having a decent day. So are your photonics names. AAOI, that's up 6%. Once again, if Googs and Tesla are spending this much money, the obvious names that should be getting the bid are your semis, which feels like that's starting to happen. Google still down 6. Street's not bringing in any love on Google. 12.5 million shares of the Googs have been traded today. Coherent, that's up 2.9. Microsoft almost ready to flip green, but still red. Oklo, that's down. Palo Alto, that's down 2.3%. Along with some of these other cybersecurity names. Anthropic is considering an unusual plan for employee stock sales after it goes public, as per the information. If the information is reporting that, then that means they are definitely considering going public. There was a report today. I don't know how accurate it is, but there was a report that's been going a bit more viral around Anthropic's ARR, and the estimate is that Anthropic is now at 74 billion in ARR. OpenAI is at 43.1 billion. We don't have actual data yet on if that's true. If it is true, then these are both up about 50% from the previous estimates. This is from August 2023 to July 2026, and there's obviously a current gap of 32 billion between OpenAI and Anthropic. Theoretically, if they have these numbers and they commanded a $2 trillion valuation, which is what I think they would have to be commanding, because they're both basically worth $1 trillion in the private markets. I mean, I feel like the street would be able to say, yeah, you guys deserve to be worth $2 trillion if you're basically doing close to 80 to 100 billion in ARR. But the what discount rate do you put on that growth based on this whole new thesis of open source models being significantly cheaper? Or do the regulatory bodies come in, as Trump and JD Vance talked about yesterday, along with Bissent, that we need to ban these Chinese models from distilling American models? I don't know if that's possible, but if they do, and you just have some more regulatory capture, maybe that helps the open source revolution not be as aggressive towards the closed source models. Micron did touch 1,000, literally got rejected at 1,000 and to 994, but it feels like it should be able to get back there. As you are at 994, right at 1,000, you get a red candle down about $6, but still up a nice 3.7%. If I am lagging again, please restart the stream. It's really not me. I mean, it is me, but I think it's not my internet. So restart it. Hopefully that works out. Palantir 124. As that tries to go green again. DRAM should be up nicely today as all the memory names are participating. 59. That's up 2.5. Where's BTC? We are below 65, unfortunately. SPY got a pretty nice bid, actually, at 738 to now 741. Trump did not tweet anything or anything like that, but you do have SPY getting right back up to those levels. Unfortunately, Google still at a low of day, as that's stuck at 320. And Tesla is now at a new low of day at 331, down 11.4%. So Tesla got a candle up to about 337 from 330 or from 333. Now it's right back to 331. So Google and Tesla are the ones taking it on the chin today. Google's about to fall below 319. Google falls below 320, now below 320, as the other names pick up the slack and take those flows. It's pretty incredible, dude. Look, I thought Tesla would have a little bit of an ugly quarter. I didn't think it would be 11% down. That's a lot. Google, I could have seen it going down 7%, given it was already down 10% going into the print from the highs. Yeah, it still feels a bit aggressive, but... And why is NVIDIA not up? Like, why is Micron up, but NVIDIA's not up? Like, Google's going to be spending a lot of CapEx on Micron and NVIDIA. Again, that entire pump NVIDIA had yesterday completely faded away, as Micron's still back below 1,000 again. Tesla earnings have been declining for the past 5 years. Agreed, but the stock has still been able to hold the premium, right? So again, it's the conventional thing everyone says about Tesla. People are not buying it for the earnings. They're buying it for something else. Breaks today, if that entire narrative is just like not real anymore, that people are, like the earnings, because if you buy Tesla for the earnings, the stock can't be at this level. But that's never how Tesla's been, and I don't know if that narrative changes today. Although today is the ugliest day for Tesla that we've seen in a long time. ServiceNow flips green again, 96, Palantir 124.40. Then Amazon down 3%. I don't know what to tell you guys about the lag. I don't know what to tell you guys about the lag. It is not the internet. I'm telling you, it's not the internet. It has nothing to do with the internet. It has to do with YouTube here or StreamYard. If it was the internet, the things that I need that are loading would not be loading. So I don't think it's the internet, but you are free to think it's the internet. But I don't think it's the internet. If it was the internet, I would say it's the internet. It's been the internet before, and like we've dealt with it. I don't think this is the internet. YouTube doesn't update their app and just makes money off our suffering. Yeah, a bunch of you are saying no lag as well. So how would it be no lag for some people and then lag for other people if it was the internet? That sounds more like a YouTube thing. If it's the internet, it should be horrible for everybody, which it has been in the past, and I've dealt with that shit. If it's good for some people and not good for other people, it reminds me of what happened 2 weeks ago when YouTube was lagging for some people in certain geographic locations and not for other people. Wasn't that because AWS was down one of those days as well? Is AWS down today? Because that could also explain it. Let's see. Because if it's a down detector issue with AWS, there was a little bit of a spike around 9 a.m. on down detector for AWS. It's not that aggressive, but that could be the bigger reason. Amazon 236.89. Because if it is AWS, it could be a Cloudflare thing, and that could be affecting StreamYard. Microsoft 389.25. That one's still down. Robinhood really fighting for that 104 level. It was almost below 100 pre-market, 103.56. Robinhood has earnings next week, along with Microsoft and Meta, which is also going to be really important. No, it's not AWS because of YouTube. It's AWS because of Cloudflare, and Cloudflare is what StreamYard runs on. And so if StreamYard's messed up, then it's not even a YouTube problem anymore. It's a StreamYard problem, which would end up affecting YouTube, but not directly from YouTube. Tesla 328. Wow. All right, so we have officially fallen below 330 on Mr. Tesla. Paul, thanks for the super chat. NVIDIA is underperforming most likely due to Google stating last night that they're starting to ramp up TPU deliveries to customers. It will rebound. Yeah, the Google TPU news was important, and you would also think the stock would get a little bit of love on that because that's not just pure capex, that's actually sales of their chips that they're building. S&P 500 back below 740, so look at that rejection off 742. Went V-shape up 742, then right back down. The problem is if Google is still spending the amount of capex that they're spending at, they're still going to buy a ton of Vera Rubin chips. So for the market to be upset because TPUs are there after the market has known so much about TPUs, I mean, it's the conventional reason why NVIDIA has been getting hit across the entire past 2 months, right? It's like the competitors are making their chips. But if Google's capex is not only going to TPUs, which I would doubt it is, a lot of it's still going to be coming to NVIDIA. So it's just kind of weird that the market is taking some of the semis up. But now the semis are not even fully, look at that, Micron $20 within 2 minutes from 1,000 to 981. As that one gets hit. Nebius 225 to 220. They're all kind of following the S&P chart, to be honest. Same thing with Broadcom right here, 397 to 393, up from 389 in the pre-market. Are the software names getting any of that? The software names are getting a little bit of it, but if Palantir starts to go back to 121, then it would follow the S&P chart again as well. This is this is a interesting reaction to these earnings, although it's also kind of conventional. Tesla 329. I wonder how low they will let this one go. 10 years still at 4.7, not stopping. Oil is still at 90, below 300. I mean, could we really imagine if we see Tesla below 300? It would be one of those things where it's like, damn, this has not happened again in a very, very long time. Last time we had Tesla below 300, August 2025. August 2025. Yeah, Brent's at 100 as well. I mean, crude is what we look at for gas prices, but Brent is at 100 as well, which is not what we want to see. Corning, I think, is actually up today. Corning is up 3%. So you got another semi name doing okay. Service now flipping a little green. Sir Crypto, thanks for the super chat. Thoughts on IBM being so low? Is this a dip to buy? IBM has a lot of fundamental structural issues, although the call was actually really good. And some of the stuff they said on the call was actually very encouraging for like how the market's interpreting their growth, even with the revenue decline for the CapEx budget shifting. The problem with IBM is like, do you buy because of the crypto angle? Do you buy because you think in 90 days they're going to fix their issues? Like, if you don't see a resolution to any of their problems, which, you know, the earnings were fine, but like, I don't see how they're fixing this stuff soon, especially if Mythos continues to be the concern that's been, you know, causing the budgets to shift. Having said that, stock's down like 45%. So if you were going to nibble, you know, the dip could keep dipping, but at some point, maybe this is a more attractive entry than not. Tesla 328 on the day. Yeah, I think IBM CEO will be on CNBC later today, so we'll take a listen to what he's saying as well. So AMD has the event later today. I will not be streaming that event, but that will be live. I'm pretty sure Tanner will be streaming it. 555.74 right there on AMD, as that is up 0.5%. Mike, and thank you for the super chat. Zero lag here. I actually have decent internet. Yeah, maybe it's your guys' internet for the lag. Maybe it's not mine. So I'm saying, if it was my internet, everyone would see the lag. The fact that 50% of you see it and 50% don't, that makes me think it's a Cloudflare issue and a StreamYard issue, not an internet issue. Because if my internet's not giving the connection, then everyone has to deal with the lag. But it's not everybody, which is the problem here. It's new strategies to blame the chat. Dude, I've taken my fair share of hits over the stream being laggy. If you were here in 2024, oh boy, you knew the shit I went through. The mic would randomly give out in crazy minutes. It was horrible. During earnings, it would stop working. Like, it was so bad. But it's really, I really don't think it's me. S&P still at 740 right there, just below 742. Iran up 2.5%. The Google Cloud CEO is going to be on in a little bit as well, so we'll be able to hear from him. Again, nothing in that core quarter really would make someone concerned about Google as a business, but the first negative free cash flow quarter in about 22 years, I think is just something the street is digesting. And you know what? If the street digests it, then the street's going to have to move on, because Meta's going to say the same. Microsoft's going to say, they're all going to say that their free cash flow is going to be under pressure. And the street's got to get used to that. You either want them to grow like crazy or you don't. You either want them to spend on CapEx or you don't. And if they really don't, then take the stocks down further. And I guess these CEOs will eventually adjust. But if you want them to spend, then when they spend, you just can't get mad that they're actually spending, which is the scarier issue about how Google is ultimately, or how the market's responding to Google. Oh, wow, more layoffs. Uber just cut 10% of jobs in its customer service operations as it simplifies the division and expands its use of AI. The company said the fragmented processes were limiting its ability to deploy AI at scale. This marks Uber's first round of layoffs explicitly tied to AI-driven efficiency. You know what's funny about this? Uber was the example for how companies weren't going to use more tokens, because Uber said that they're like shifting how they spend on tokens. They didn't say they weren't going to stop spending on tokens. They just said they're going to shift the way they spend. And now Uber apparently is spending so well on tokens that they just cut 10% of their jobs in customer service, which is, I think, the first place most people have felt AI would be the biggest issue for in terms of jobs, because, it feels like those jobs theoretically have room for AI to replace them. Tesla 326. This has to be the largest decline intraday we've seen on Tesla in a few years. When was the last time Tesla stock fell 12% in a day? Did it happen over the past year? January 25th, 2024, 2 years. January 25th, 2024. Someone can fact check that, but I think that's accurate. The last time Tesla stock fell 12% in a day. 2.5 years since we've seen this type of a move. If it happened last year, let me know what day it happened. Intraday. I feel like it probably happened during the tariff stuff, but maybe it was over the course of multiple days, not in one day. Google 321, AAOI, that's up 6. As Texas Instruments is down 3.5%. Damn, this is pretty big decline. I wonder if anyone says anything about this If anyone heard the call yesterday, it was not a good call just because the energy wasn't really there. And I also think, they didn't even answer the retail questions. They didn't even like go through question by question. They like grouped them all together and had one response. So like they didn't even take their time answering specific questions because I think they didn't have any interesting answers or anything new to say. So they kind of just grouped it together. So it was one of those things where, they had the earnings, but I don't think there was something meaningful that they were, super excited about. IRGC, after the official resumption of the war, the invading U.S. military had been using cruise missiles launched from naval vessels in the Indian Ocean. However, after those ships exhausted their missile stockpiles, yesterday resorted to using B-1 bombers. As officials from the Ministry of Foreign Affairs have also stated, any base used to launch attacks against Iranian territory is considered a legitimate target for us. Which, again, just creates more escalation here. Nebius 225 right back. Nvidia ended up losing 209 right here. What a weird set of events that are causing many of these moves to really not be as consistent with each other. Adobe, that goes down on the day. Shopify, ugly 3% move from 130 on Monday. I mean, has anything really changed in 3 days on Shopify other than the market just taking down the semi names? Capital One, that's down 1.6. They had a really good earnings. SanDisk now flips green after being down 2%. Stats up 1%. Exxon should be up. Chevron should be up as oil goes up. If you've left VG in the port or next decade, you have had an oil hedge. That is, it's up 30% in the past 2 weeks based on oil going higher. And now you're seeing more of this momentum. Let's get some more coverage right here on oil as it continues to spike right here.
Tankers off the coast of, in the other important waterway that was being used to bypass the Strait of Hormuz. President Trump holds them accountable. He put out a post this morning on Truth, said he's very disappointed and, could potentially retaliate. Again, any kind of expansion in this means higher oil prices, right? Fewer options to get oil out of the Gulf region. That's problematic. So we're watching that carefully. But guys, it comes against the backdrop of the AI revolution and the massive boom in AI spending, which, and as we've been talking about every day, that's really what's front and center for the markets and increasingly for the economy. And because we're in earnings season, we're getting more evidence that it is helping companies far and wide, not just the semiconductor names or the hyperscalers. I mean, listen to some of these signals that we're getting from other companies. CSX, the railroad company, for instance, we pulled out this quote: steady construction activity continues to support minerals and metals, and investment tied to power infrastructure and data center buildouts is driving demand in domestic coal, frac sand, and heavy equipment. So again, the tech boom and the investment boom, not just helping the tech economy. Dow Chemicals Industrial Solutions business reported an increase in net sales with local price gains in all regions compared to the year-ago period. Volume growth was driven by increased demand for data center applications, partially offset by impacts from the Middle East conflict. And that was the quote that I really wanted to highlight, given some of the angst right now around the conflict, expansion, higher oil prices, higher yields. I mean, we're at the highest 10-year yield since January 2025. But look at how much it's being offset by the boom in investment spending around data centers and AI in this country.
I would say not even offset. I mean, the market is trying to get its arms around the voracious appetite for capital and how fast it's being deployed in the CapEx AI spending build out. It has created the conditions that look almost like an overheat more than anything else, or at least that's what bonds are saying. And the way the market is having to navigate this is, look, since the S&P first got to 7,500 in mid-May, we've been talking about a couple of dynamics. One is semis perform well at the expense of the spenders, the hyperscalers. So that has kept the tech trade in this offsetting mode. And then if the market wants to broaden out away from tech, it only happens if yields cooperate. So yields down is almost necessary for the majority of stocks to work. So both those things working against the market today. It doesn't mean that we've kind of fallen out of this range or anything like that. But, we have a Fed meeting next week.
Yep.
the odds, and nobody really thinks there's going to be a hike, but the odds are up to like a third that there might be a hike, which is a little, it's more just unnerving for the bond market to just not be sure of things this close to a meeting. And I do think that's pushing the action around.
Well, I think part of it is, the economic signals continue to be really strong. We got jobless claims today, the weekly number of Americans filing for unemployment claims, lower than expected. Again, it fell sharply, actually, to 187,000. That was a drop of 22,000. And so the 4-week average goes to 207,000 from 214,000. However you slice it, these numbers continue to paint a picture of solid employment. Good demand for labor. You're not seeing any kind of layoffs. It's been totally steady. I mean, and it might have to do with the fact that, the investment around AI is driving so much of corporate America. There was a lot of concern that would increase the job losses around. And, we've seen a little bit of anecdotal evidence, but the Wolf research chart, I thought this was really good, showing some economic impact on jobs. So basically, they're citing the research from Brookings here that counties receiving their first large-scale data center experience had employment gains over subsequent 5 to 6 years. Private employment rises 5%, led by construction, information services, and professional services. Wages increase 4 to 5% over that period. Home prices actually show not much of an impact, but take it together, it shows the economic benefits can extend well beyond the facility. Everyone says it's all just temporary jobs. Sure, a big burst of it is, but that they can extend beyond that because the x-axis there is years, and it shows there's definitely a measurable positive impact in job creation.
Yeah.
And the thing about that job creation is that it's great for GDP, great for the labor market, obviously great for earnings. It's just not the best for inflation. And, the market still is struggling to figure out what to do with that. Google stuck at 319, not really getting a bigger move. Data from the Federal Reserve Bank of St. Louis shows 105 million Americans were not in the labor force in June, surpassing peak levels seen during COVID and the Great Recession. Oh, wow. Labor force participation is now 59%. It was at 63% last month, or I think it was like 62.7% last month. 59%. All right, so you've got basically a third of the population not in the labor force, 59% labor force participation rate, but you're still not seeing jobless claims tick up as aggressively. Or you're not seeing an issue with JOLTS. I mean, remember we got JOLTS a few weeks ago? We had 300,000 jobs more than expected available, even if you think those are fake. But at least the aggregate data, especially the job claims we got today, not showing a massive decrease in the labor market, which is not showing an increase in unemployment. As Nebius 230, so your data center names starting to somewhat try to flip green right here. Micron still got rejected 3 times at 1,000, but trying to get back above there. The private payroll numbers were bad yesterday in terms of the lowest hiring we've seen since May. If we get a labor market issue, the Fed's going to have a lot of different things to deal with. Right now, it's just inflation, not labor market. But again, then you get the jobless claims today. The labor market seems like it's fine. So there's not a real accurate approach yet, which is why I think Warsh wants to get these Fed task forces in place to try to figure out, how do we meaningfully come to a conclusion of what is the truth about the data. But right now, it's relatively unknown. Reddit 176. Again, I thought Reddit going down yesterday 10% was kind of stupid. They have leverage in their data. They're going to get another deal that's probably worth more than 60 million, but stock lost 8 billion in market cap based on that deal. How about ETH? It was at 1950 yesterday. ETH is at 1898 as ETH has taken that hit. Amid is Path done? We talked about Path yesterday. I don't know the most about the company, but once again, I think RPA is more easy to commoditize in the age of AI. Also, Claude Cowork came out with a tool yesterday that literally lets you record your screen and take actions based on what you do on your screen, so it can train itself to do those actions, which is theoretically what Path is supposed to be doing as well. So again, some software companies will be commoditized because the moats are not as large, but I don't think you throw away all the software companies because that's happening. Palantir still below 124. Microsoft. Wow, Microsoft. All right, there's your red candle that officially comes in for Mr. MSFT. 385 on Microsoft. Google's down 7% now. 318.24. Kratos, some of your drone companies have been doing well all week, to be honest. Kratos up 6. Again, is anyone selling their Google here today? I know a bunch of people said they're selling their Tesla. Is anyone really selling the Googs? Or is kind of one of those things you just have to navigate when something like this goes down? Here's Melius's research head of tech and his take on Google and Tesla.
Third of those that slipped, about $700,000 have closed. And then I cover Google as well. I think the big issue there is that I hear all you guys talking about CapEx, but they package that with a margin with, and then they talked kind of down margins going forward. So you can't really do that because the CapEx hits D&A and it hits some expenses with regard to data center upstart expenses, and people don't want margins to whiff. I think that's the thing that you guys really should be talking about. The CapEx going up was basically in line with expectations. I thought that was positive for the chip cohort. And I continue to not like hyperscalers because why bother? They don't generate any cash. Who cares? Buy the chip companies.
Well, yeah, see, that's crazy. Is that just me or is that crazy? Well, technically, it's not crazy because that's been how the year has played out. But like, why bother buying the greatest companies in the world? They don't generate any cash. Buy the chip companies. Like, and this guy works on Wall Street. Like, this is what he's telling his clients. Like, is that really the way the market's going to go the next 3 years? Or is it crazy to sell off the companies that are putting all their cash flow into these smaller companies on a temporary basis? And eventually that free cash flow is going to come back to them and they're going to have built, massive data centers to be able to execute on their operations. Or is it just by the semis? I mean, I think that's what the market's been confused about this entire year.
I mean, Meta and Amazon are both down 3% this morning too, along with Alphabet, and they're not necessarily tied to, Google's margins in search. So you still do see, as you're saying, people just decided you buy the hardware food chain when it feels like CapEx estimates go up. Although even there, it's a little spottier, right? Micron had a much stronger bid earlier in the morning, and I think there's just a generalized anxiety about just, when the treadmill might slow down and what it's going to mean for the different players who are recipients of all this if it does.
Well, I would say the Google margin stuff was all due to them talking about cloud and CapEx and data center starts. So that's going to hit Meta and that's going to hit Amazon as well and Microsoft when they report. So the margin theme and the hyperscalers is just getting going. It has nothing to do with search, really. Now, with regard to the chips, look, I think that the issue that's going to be the big debate on your network is if these stocks go down, are they going to stop spending? Are they going to realize that their investors, or are they going to start to think their investors want them to stop spending so they can be back to what they used to be, companies that could buy back stock, companies that could weather downturns, all that stuff. And I just don't think they will. I think there's too much at stake for the future and too much disruption with AI. If they miss it, they're toast. The one I watch the closest, frankly, is Meta, because their strategy just seems to change on a daily basis or not be known. I hope that they get it going, because that'll really help the trade if we start generating some revenue and it's a little clearer.
Ben, what is your fiscal 27 CapEx number for Alphabet?
I think I took it up to 330, but it keeps going up. I wouldn't be surprised if it's higher. I mean, that number.
Talk about someone who's having bad internet today. It's not me, it's this guy. But notice right there, he said 330 and it's going higher. Sell side yesterday or buy side on JP Morgan yesterday said 375. I mean, that CapEx number is going to be massive. And I think that's why the stock is down, because the market knows they have to get ready for that. But that's also what Meta, Microsoft, and Amazon are going to say as well.
We started out way lower than that, and we just did 26 CapEx. It could even double, but we didn't want to be that aggressive. So we're going up well over 50%.
When do you think, is there a point where the market's okay with negative free cash flow for these big companies?
I mean, look, I think that if the margins beat and then your DCF kind of can have much better flow, I guess later this decade and in the 2030s, then yeah. But you package it with a margin miss, we're on margins, and people go, hey, what's going on? And have to figure it out. So I think it has to come with better margins so the DCFs for the long-term earnings look a lot better. And I think that, there's a chance that that's coming. Obviously, part of the reason they don't have the margin is they have to pay for memory and they have to pay for the inflation of putting a data center up, which costs a lot of money. You got to get people, power, who knows what you got to plug in that thing. And there's a lot of extra expense right now. I'm trying to. I think they're going to keep the pedal to the metal, though.
Okay, this guy's internet obviously is having a little bit of issues today. It's not me. We can barely hear him. But his broader point is the capex is not stopping as Google hits a low of day 318.77. Volume is 22 million shares on Mr. Googs right here as the market is trying to figure out what to do with this thing. 370 billion of capex. Are we ready for that? That is the question. Are we ready for Meta to say it's going to be 280 billion of capex? Which could happen, right? Like, I don't know. Again, I think it is kind of crazy that it would be like these companies don't produce cash flow, sell them off by the companies that produce cash flow. And, some people are saying, well, why don't you just rotate when it's time to go back to the hyperscalers? If it was that easy, everyone would be rich. It is not that easy to be like, oh, the semis are done. Let's go to the hyperscalers. Like the market sniffs out well before you actually see the earnings peak and does the rotation, which is why we've seen the hesitation on the semis for the past month, right? The market started sniffing out, hey, is there an oversupply? Is there not enough demand for this capex? This Kimi K3 thing messing everything up? As soon as the market figures out, and it will figure out before you or I do, that, yeah, the capex is stopping, I would say at least 6 months to a year before that, they are going to not own the names that are benefiting from the capex. Now, that might happen in 2-3 years, right? That might not happen next year. But the point is being able to time it is not the easiest. Having said that, for the next 2-3 years, if Google's stuck and Micron's going to the moon, then I understand why people are saying, let's buy. That's what I'm saying. What he said is crazy conventionally, but it's also not crazy because logically it makes sense. Like you buy the company that's producing the EPS and free cash flow, even if it's in a unsustainable way, because in the short term, those stocks theoretically should go up. It's just, do you have the ability to time when to get out of it and go back to the names that matter? Or quite frankly, just buy both. You buy the Googles, you buy the Microns of the world. One underperforms, one outperforms, and you kind of live it. You live with that type of portfolio dynamic. Yes, we will talk about Intel today after the bell. Intel, I'm a little scared about. I don't own Intel. I've never owned Intel, but the multiple on Intel doesn't make sense. The multiple on Micron does in a good way. The multiple on Intel doesn't in a bad way. And so CPU demand is crazy. I think Lisa Su will confirm that in her speech today at AMD. For their event, but how much of that is priced in for Intel? I mean, last quarter they beat by 3,000%. The reason they beat by 3,000% is because, the expectation was significantly lower than the CPU revolution we were going to get. By the way, the ECB held rates steady today, so the European Central Bank did not raise rates. But can they have that type of a surprise again to get this thing to pump back into the 140s? And honestly, ASML, TSM earnings, if they're a sign, then Intel's going to have a great earnings. I just wonder how much of that is baked into it at this point. Broadcom 395 as that continues to go flat. Is the dip in Intel a buy? I don't. Well, okay. So the dip in Intel is a buy if you think Intel is the TSMC of America and deserves to trade at a premium because of that. And you think the growth is there to justify the valuation going into it. Conventionally, I feel like Intel's like Bloom, right? Valuation doesn't really make sense, but Bloom Energy is super important when it comes to fuel cell technology in the country. Intel is super important when it comes to protection of national security. So it's like those are your qualitative reasons to buy it. We saw what happened 2 weeks ago. The qualitative reasons go out the window when the market starts to take a dip. And that's why these are some of the more high beta names that are out there. But I mean, the multiple on AMD is better than Intel, right? As Microsoft goes below 385. So I'm not sure, but that stock has made a massive run already this year. SpaceX, wow, this is the lowest we've seen SpaceX. So SpaceX has quietly this whole day been going down with Tesla and Google. Tesla now 12.8%, hit a low of the day at 325.60. As that continues to get hit, SpaceX down 2%. So this is actually kind of crazy. SpaceX's market cap is 1.47 trillion. At the height, it was 3 trillion at 230. Tesla's at 1.2. So if you put Tesla's market cap and SpaceX's market cap together right now, it's still not more than what SpaceX was at 3 weeks ago. It's at 2.6, which goes to show how aggressive SpaceX valuation became just a few weeks ago. I mean, if they were going to do a merger, like maybe not. They're kind of trading at the same market cap at this point. Maybe there's an argument here. Dude, that's ugly. That's ugly. Rubio's live. See what he's saying about Iran. And if we get any updates here from him.
Okay, we'll watch as that goes. Defense.
Let's talk. Iran is begging every day. The problem with Iran is every time they make a deal, the people that are in charge there, they either break it or they want to change it. So it looks like they're not ready to make a deal. So they're going to continue to pay a price.
Okay, we'll watch as that goes. Defense, considered as legitimate.
All right, so same thing that Trump has been saying, right? That they're not ready to make a deal. That's what's justifying the further active hostility. Yeah, Elon's net worth has to be taking a bit of a hit here. This is the thing, when everyone says Elon should give up all of his wealth when he's worth $1 trillion, we need to ask these people, well, now he's worth $700 billion. And where do you think that money magically went? To lose 300, 500 billion in a month. It's not like he could have just sold everything and solved all the world's issues with that money. Like, there's something called a stock price that is associated with his net worth. Because everyone wants to talk when the net worth is all up here, but when it actually goes down as aggressively as it has, because guess what? His stocks are taking 30 to 40% declines. No one wants to ask where that money just vanished in thin air from. That money was never liquid. That was kind of the point. SpaceX right there. Still done. He lost 750 billion? Really? Oh no, you're right. I'm thinking of SpaceX from 170, but SpaceX was at 230. Yeah, Elon, his net worth now is officially 750, which means it's basically been cut by 40%. Still number one in the world. Although Bezos would be catching up if he didn't get the divorce. Bezos would be at like 450 billion. But it is down substantially. Meta right there, 606. Down 3%. Nebius still moving as that's going up 228. And continues to go higher. That's his margin loan. He should start a GoFundMe. He should. He might need a GoFundMe. Is Elon selling? No, Elon is not sold. Elon is allowed to sell SpaceX in a year. And I don't think he sold Tesla in like a year and a half. No, last time he sold was to pay his tax obligations when he got the new compensation package. I think he had to sell like $1 billion of stock. Elon hasn't been one to really sell stock like that. There's a lot of CEOs that sell stock. Elon doesn't do it as often. Hood right there, 102.80. But when he does do it, it's a pretty big amount. It's usually for a reason. SK Hynix, that's up. Lumentum, that's up. Coherent, that's up. ServiceNow, that flips up. CoreWeave, that's up. You're seeing more of these names start to go green. It's just the Mag 7s, including Tesla and Google, that are taking the worst hit for today. Bloomberg's reporting ECB officials are ready to raise interest rates in September. So they didn't raise it today. That also could be part of the reason the market's taking a hit, as you're seeing reports that they are ready to raise it going into the future. Here's a few more clips of Rubio that we just got right now.
True Social that the U.S. is going to bomb and destroy a bridge or power plant every time that Iran targets some ship in the street. Is he talking about civilian infrastructure there? Do you think that is?
This is what he's talking about. Iran is begging us, okay, both directly and indirectly. Let's do a deal. Let's talk. Let's talk. Iran is begging every day. The problem with Iran is every time they make a deal, the people that are in charge there, they either break it or they want to change it. So it looks like they're not ready to make a deal. So they're going to continue to pay a price. And they're going every night the price gets higher and higher and higher. And that's what's happening now. And until they, maybe in a few days, they'll be ready to make a deal once they realize that this is not a winning proposition for them. And that's what the president is outlining. The idea that this is going to continue, it's not going to continue this way. The price will continue to get higher every single night until they come to their senses. Right now, apparently they haven't come to their senses. And so the president doesn't see a lot of utility in responding to their overtures at this point, because frankly, Iran is clearly not ready to make a deal, at least not one they're willing to live by.
But is he talking about civilian
And then this is what he said about civilian infrastructure.
Trump's statement about the bridges and the power plants? Just want some clarification. Do you rule out striking civilian infrastructure?
I think I saw, guys, I saw Arachi, their foreign minister, who the other day say or something about their policies, an eye for an eye. The president's policy is a head for an eye. I mean, honestly, that's what it's going to be. I mean, they will pay a very heavy price for the things they're doing. They're already paying a very heavy price. You guys don't know it because you don't cover it. You're not in Iran. You're not in the street. They don't have a free media. But they're going to continue to pay a very heavy price. Their industrial base has been decimated. Their defense industrial base has been decimated. They're losing launchers. They're losing radars every single night. They are suffering billions of dollars in damage, and their economy is a disaster. But despite all that, okay, these people who are calling us every day, begging, let's do a deal. They send us messages through other countries, third countries. I mean, they're running out of countries to send. Even I had countries here coming up to me, I just spoke to the Iranians, they want to do a deal. The problem is every time these people do a deal, they either break it or after they make it, they want to change the deal. So they're probably not ready to do a deal yet, but they will be soon because the price they're paying is very high despite their tough talk and their flowery language and their stupid Lego videos they put out. I've never seen them, but they put these things out on social media. Despite all that bravado, they are suffering tremendously, and they're going to suffer more until they come to their senses. They're not there yet, unfortunately.
Which countries?
It does not sound like de-escalation. Does not sound like de-escalation. 42.35 as that one continues to get hit right there. DRAM, that's up 1.78%. SK Hynix, that's up 6. Amazon, wow, 5% on Mr. Amazon as that one continues to be able to take a hit. CrowdStrike right there is down 2.3%. Nokia still down 1 on those earnings, which were relatively strong. Dell actually, Dell was 380 2 weeks ago, or not even 2 weeks ago, on Monday. So the fact that SMCI on Tuesday came out with that margin increase, that completely flipped Dell. Micron back at 1,000. So some of your semis doing okay. It's just this oil and 10-year drama is not really stopping right now. 10-year now still at 4.705. There's a new 52-week high as well for the 10-year. SpaceX 112 down 2.4. Is Tesla actually down 14? Oh my goodness. Dude, who is selling Tesla this aggressively today? I don't think this is retail. Who do you guys think? It's retail or institutions? You think the toots are just done with this today, or you think retail is like, I'm out. I'm going to buy Micron, like, because Tesla's had bad earnings before. Quite frankly, Tesla's had worse earnings than what they had yesterday, and the stock has not reacted, down 13.5%. Like, this is unusual behavior. It's not like this stock has been relatively flat all year. You might have some negative 4% days, then the next day it recovers. Like, it's probably being shorted here. I mean, that's fair. You probably had a lot of people that opened a short today. Question is when they cover, and if it's a long short or a short that they cover out relatively quickly. Kathy got a margin call. Kathy is still up a ton on her Tesla. I think she's she's held Tesla for a while, so she'll be fine. Now her SpaceX, which by the way, she bought more SpaceX yesterday. I don't get it, dude. I really don't get it. Like, I don't understand it. Like, usually when an institutional investor buys something and, like David Tepper, Bill Ackman, you're like, all right, what do they see in this? They're really smart people. They pay a lot of people a lot of money to do research. You know, what is Ackman seeing in Uber that is so special? And although Uber hasn't moved that much, you can at least look at the company and be like, dude, this is a good quality company that he's buying. You look at SpaceX and you're like, what the fuck is like, what is she smoking for? How could you, like, you're managing billions of dollars based on momentum and vibes? Like, nothing fundamental here. 112.37. Yeah, Cerebras as well. I mean, look, Cerebras is going to be an important company, but why buy it the day of IPO? Like, do you get something special if you bag hold IPOs in the institutional world? Do you get like a medal or something that we don't know about? Cerebras 212, as that's down 1.2%. Walmart just hit a new 52-week low, actually. Why is Walmart down today? This thing should be up. If well, actually, a lot of the semis are down. They're up today, so high beta is up, Walmart's down. Walmart, is that actually a 52-week low? Yeah, that's actually a 52-week low. Stock's down 5% this year. It was 112 January 2nd, 130 May 19th, 107 today. All right, folks, let's bring someone onto the show to help us make a little bit of sense of what we are seeing in the semiconductor market and what is going on with the Googs and Tesla. Ladies and gentlemen, it is Mr. Jose. What's up, man?
What's up, man? Good morning. How's it going?
Good morning to you. I hope you're doing well. Long time no see from 5 hours ago.
Yeah.
Got a lot to dive into, bro. I think let's just start off with Google crushing earnings and the semis loving it today. I mean, given you are a semiconductor guy, I'm assuming you liked what you saw from Google.
Yeah, I mean, I obviously liked it a lot. The big CapEx growth, right? And more importantly, the commentary behind the CapEx growth. This time, I felt like last quarter when we saw companies increase their CapEx, they really did blame a lot of the CapEx growth due to memory inflation costs. And I think we even talked about it last earnings, where it's like, I'm happy to see the CapEx growth, but it really wasn't kind of due to increased demand of actual chips. It was just more memory price increasing. The commentary that Google shared, at least yesterday, was that the CapEx growth was driven because they're picking up more servers faster than anticipated. So this is an actual direct benefit to all semiconductor players, right? Because now they're going to be able to buy more AI server. They're buying more AI servers, so that kind of goes throughout the whole supply chain, from chips, from optics, from copper, networking, and the list goes on and on. So I think for a semiconductor, if there was one place where I would really focus on, was that and the commentary behind it. The other thing that I would say is RPO. They increased 50 billion over a quarter, which is wild. What was even more impressive was the commentary that they shared that within the next 24 months, 50% of that RPO or that backlog was going to become revenue. Now, if we just do some quick napkin math, it was 516 billion. Let's just round it up to 520. 50% of that is 260 billion. Now, let's divide that 260 billion into 2 months, but not equally. Let's do maybe in the next 12 months, 110, and the month after that, the year after that, 150 billion. That would be massive. If someone's not familiar, in the trailing 12 months, Google Cloud has done roughly $78 billion. So for you to be able to get to 250, 260 billion, you pretty much needed more than 3x, more like 3.5x your Google Cloud revenue from where it's at right now in the next 2 years. Yeah, for that time. So I think that's well, to kind of get that number overall. But I think that's overall very bullish for the industry, and it's showcasing that there is actual ROI coming from the compute that they are spending a lot of money. Unfortunately, you showed that slide. That negative free cash flow is what the market is scared of, I would say, and it's the commentary that the pressure will be there for 2027 as well.
Do you think Google deserves to be down because of that free cash flow being negative? Like, is that a logical reaction?
I think for people not in the AI industry would say yes. I mean, there's a lot of people that are not AI pilled like me, and for them it's like, hey, why are you going crazy on this? And obviously, maybe a lot of our viewers are more into the AI space, but it's a lot of people still are not using AI on a daily basis, or don't know the people that are those power users that are using it. So for them, it's like, why are you going negative free cash flow on something that I can just Google, or that I can go ask like thousands and thousands of other AI chatbots? And there's a lot of people like that. So to me, that it makes sense, the market reaction for it. But for someone AI pilled, for me, it's like, this is stupid. And like I say before, the market sometimes is stupid.
The neo clouds, as we are getting a little bit more of a uglier dump here, folks. S&P 500 lows of the day. The neo clouds, I'm assuming, liked what Google had to say. So what do you think Google said about third-party data center providers that Nebius and Corey were loving today?
Yeah. So they in the commentary they mentioned that for at least the Q3, they would rather they're gonna really push into third-party compute, which is meaning they're gonna rent from these neo cloud players for kind of like a short month time frame. I don't know if they actually gave a time frame, maybe 3 to 6 month contracts, but for them, it makes sense. They mentioned that I don't mind taking a margin hit in 6 months if in the long term these contracts are a multi-year contract, because at the end of the day, I'm still going to be very highly strong in margin with these contracts, and I'll rather get the compute now, because the worst case for them, right, is if they don't get the compute now, these other customers are going to go to Amazon or Microsoft, and this is this is also why they're kind of in this AI story. It's like, it's not just about the AI story, but it's locking in these cloud customers. And once these cloud customers come in for some form of AI solution, then they are also able to upsell them into other cloud products that they have. And that's even more margins for them. So for them, it makes more sense to not lose market share, to continue to hold these customers, even if in the 6 months, their acquisition costs might be higher due to these neo cloud rentals. But in the long term, it's probably more expensive not to have that customer at all.
So that basically screams that the compute constraints and the capacity constraints means that the third-party providers like Nebius, Corey, by Ren have a much more sustainable business model in place. Would you imagine the street is excited about that when it comes to their business models, or are there some corresponding questions around the neo cloud that Google didn't really answer? Because Amazon and Microsoft are probably going to say the same thing.
Yeah, I think the big cloud players are gonna do the same thing, because again, no one wants to lose a customer. No one wants to say that they lost a customer because they didn't have the compute. I think the bears can easily turn this around, and I understand the bearish case here is most of these are just short-term contracts that they're saying. They're saying we're only gonna do short-term contract until we have the internal capacity. So we're to me that bears can easily say once that internal capacity comes, neo cloud players are going to be a horrible business. And I think that take is right, but I just think the timeline before we kind of get that internal capacity to match demand is going to take a lot longer than expected. So I actually believe the commentary is going to start to shift from management, where right now they're saying short-term contracts with neo cloud players or third party, to long-term contracts. Because if I'm Google and I made, let's say I make a 6-month contract with neo cloud and I'm paying a lot of money right now, and then 6 months later, I have to actually renew it for another 6 months because I'm still not internally balanced in my supply to demand, and I'm going to pay another 6 months of higher margins. Wouldn't it just make more sense to just say, you know what, neo cloud players, maybe because this demand is crazy, I'm actually going to be making longer term contracts with you guys, a 2-year or 3-year time frame. So I think that commentary is going to change, and I think bears are going to see that the neo cloud business, at least for now, is going to have a lot of strength.
Okay, last thing on Google and Jose's Twitter right there in the chat. Everyone, please make sure to follow him along with his YouTube, putting it there in the chat as well. So I'm assuming the buy side thinks 375 billion in capex. Google didn't say how much, but they hinted that it's going to be a lot more. Amazon, Microsoft, Meta, they're all going to have to do roughly the same. Do you think this continues for the next 3 years, like, Jensen said 3 to 4 trillion in 2030 of capex. Is that going to be more like 8 to 9 trillion? Or at some point, do you think it moderates? Like, how are you thinking of that trajectory of capex cycle right now?
For me, 3 years is a very long time because I think it's very dependent on AI innovation. What is the next AI wave? So for me, I foresee at least the next 18 months from this point to still be strong. The reason being is I think coding is still just very early for AI solutions. And we're really starting to see this massive shift in AI and cybersecurity. And I think that's going to be a massive, massive market. Now, this doesn't mean I'm going to buy stocks when they rally like crazy. I think obviously every investor should, like right now, we kind of had a nice pull down. And for me, I've definitely taken a liking on the higher beta names right now. But that doesn't mean every single time, even though I'm bullish in this industry, I'm going to be buying every single day, even when the stocks are crazy, crazy green. So just kind of, while I am a bullish in this cycle, I am also somewhat careful with it. But we need to continue to see those innovations in AI. So I think coding is still going to be massive. I think cybersecurity is going to be another crazy wave. And then in 18 months or a few months from now, what is the next story? Or is the growth in these stories enough? And I think that's the scary thing about AI is you need to be very vigilant in what is innovating in this industry so you can kind of at least try to foresee if the optimization of token is being outstripped by the demand growth in token itself. And that's the story you really have to pay out for.
Okay. Tesla, worst day in 2.5 years. Anything you got on the call that can give some guidance towards what's happening in the semiconductor world?
Yesterday we were streaming and I said I didn't really get much out of it. And I think maybe I was just brain dead after Google's earnings and the excitement I had in my head when I heard all those CapEx numbers. But I read the transcript and there were a few things that I thought were interesting, at least for Tesla's potential. The first thing is Elon talked a little bit of I forget what he called it, but it was kind of like he mentions that with their superchargers, he has roughly 7 gigawatts of power, right? He has roughly 7 gigawatts with his chargers. And you're not charging, there's not a car in a charger every single day, every hour, every minute. So he wanted to see this opportunity where he puts some form of AI compute within these chargers. So when the chargers aren't charging, they're actually able to you'll be able to sell compute. Now that's a unique story, and I don't know if it's going to happen, but this is why I love innovation. And when there's shortages, it forces companies to try to think of unique ways to try to get more compute, to try to use more power. And I think this helps the AI story grow over time. So I thought that was great for them. The other thing is they did mention the Terafab will have more of like its own AI, its own day. And I want to really listen to that when that happens. The final thing, and Amit here looks like I don't know what he's watching right now. His face is...
The team, the stocks just continue to collapse. Like it's just, dude, the last time they had a 12% move was in a day. It was January 2024. So it is that they've had a 12% intraday decline. Like it has been a long time. New low of day right there at 323.
Yeah. And I don't. The other thing, I mean, not necessarily as crazy, but they did mention that the rate of selling FSD has increased dramatically. Yeah. And I think that's good, right? I think that's really good for their business. It is a higher margin software play for them. Not as exciting for the AI story, but I thought it was pretty good.
Would you be a buyer of Tesla here at all?
You know what? I after this, I have to take a closer look at them. I have like a small position, nothing I would rate myself as a major investor in. But at the same time, I just feel like there's so many opportunities in the AI and neo cloud space. So I would really have to look at what I believe, because you mentioned it, right? I mean, that it seems like the robotics play is going to happen, but it's not something that's going to happen in the next 12 months, right? So it's like if I'm investing in this for the robotics play, I don't think I need to rush into it just yet.
Tesla 324, the Googs right there at 319. The Terafab, I think you were also disappointed last night that we didn't get a lot of updates on that as well.
Yeah. I mean, as a semiconductor investor, that's where I really wanted to listen to, kind of see like how much they're planning to spend, during what time frame, a little bit more of some of the partnerships that they've made, some of the orders that they've made. That's yeah, we didn't get that, and I'm hoping a full event they will share a lot of information, not just cool pictures and stuff.
Okay, so if Google and Tesla both said that they're going to be spending this much on CapEx, obviously I would imagine you think Microsoft, Meta, and Amazon are going to do the same. In terms of Meta right here, the weird thing about this one, and A, I'm curious, are you buying at these levels? Do you like it? Have you been buying this one all year? And B, they're setting up a compute business, which is what the market should like, because you see Google's 82% revenue growth, but Meta would also have to go into negative free cash flow to set up that business. So is this another case where if you sell Google, you theoretically have to sell Meta here because they're in the same bucket?
Yes, I think so, and I think that's why the market is scared with the big hyperscalers. I think most of the market, even myself, believe that the last player to go free cash flow negative was going to be Google, right? But now Google did it maybe a lot faster than the market anticipated, and it's like, if Google is doing this, what are all the other players that we thought their free cash flow was not as strong as Google going to do? Or how crazy is it going to be? So I think if you are selling Google for that reason, for that free cash flow negative and that massive expense in CapEx, you have to sell every other player, right? If that's your thesis, it's going to be the same for all of them. Meta was one of the ones I enjoyed a lot, especially during the time where high beta stocks were going up a lot, but most of the Mag 7s were lagging. I think right now with a lot of high beta names down as well, I prefer the high beta names at the moment. But now, I mean, sitting at $600, I think market cap, I mean, forward PE ratio is 19. I wouldn't put it out of my watch list just yet.
Right. $1.54 trillion market cap for Mr. Meta. Jose, thank you for being on the show today. Deeply, deeply appreciate you. Jose's newsletter, whatthechipHappened.com. You can check it out right there. It's Twitter and YouTube, also putting in the chat. He will not be with us today for Intel, but we'll get his updates on Intel next week. Are you streaming the AMD event, Jose, or no?
I don't know. I have to get ready for my trip, so it depends if I have if I pack in time. If I do, maybe I might be streaming the AMD event.
Okay. You know, you gotta go on your vacation because why not?
Why not?
Why not? Love it. Thank you, Jose. Appreciate it. See you guys.
Peace out, man.
Later. All right. So, I don't know what you guys tell you. The guy goes on vacations. I don't know what to tell you. The man loves to enjoy his life. 605 right there on Meta. Oil, unfortunately, is at 92, which we're finally getting a real dump now. I mean, it's not just the semis, not just Mag 7. Like, it's actually everything starting to feel some pain. 10-year still at 4.705. I don't know if there was a specific catalyst, but around 20 minutes ago, that's when we really started seeing the pain. Benchmark, by the way, raised their target on AMD to 685 from 485. So they are increasing the price target. Clear Street maintained a price target of 115 from ASTS. House passes resolution to rein in Trump military campaign on Iran. The House voted 214 to 208 on Thursday to direct President Trump to end military hostilities in Iran, making Congress's second rebuke of the administration's war effort. Supported by every Democrat and 4 Republicans, the symbolic resolution reflects expanding bipartisanship unease over unauthorized military options following the death of 3 U.S. troops over the weekend. So you've got the House, I think that was literally 10 minutes ago, passing that resolution. Essentially to express that they're not happy with what's going on with Iran. Then you have the Yemenis the foreign minister say Yemen will continue targeting Saudi interests while the blockade continues. U.S. aggression will be met with a response against ships and interests. We will not hesitate to target any country that cooperates with Saudi Arabia. As the VIX is up nicely on the day. All right, so I think once again, it's just proving that the escalation is not stopping. Yeah, VIX is up 15%. When's the last time we had a 15% day on the VIX? It's been a minute. Even last week, it was like 12%. So this is actually one of the bigger days we've seen on the VIX. Still below 20, 14.9% up on the day. As this stock is down. Mitt, do you like Tesla here? I haven't liked Tesla for the past year, and you know the main reason for it has been because of the earnings decline. There was a moment last year where I thought the robotics story was interesting, like really interesting, just because I started doing a lot more research on robots. But you know that was early 2025. The next 3 quarters, Elon kept making the same argument that it's going to take time. It's not happening soon. And so at some point you have to believe him, even if he sets ambitious targets. And so without robots, I don't know what the thesis is on the stock right now. And I think that's the broader issue. And so, you know, in terms of Max Evans, it's not even been Google. It's been NVIDIA and Meta that have been the big buys this year. Obviously, NVIDIA's been okay. Meta's been a disaster. But at least I know what I'm buying when I'm buying Meta. I'm buying 33% growth. I'm buying the best operating income they've had in history. But Tesla, I don't want to be buying 18% earnings decline in a year, in a world in which every other company, even Apple, is growing way more than that. Like it's at that point, I'm just buying a dream on Optimus, which is fair, and I think there's a reason to be excited about it. And eventually, the stock will pump crazy because it's not anywhere to happen anytime soon. SPY's down 1.2. Okay, SPY low of the day. SpaceX low of the day, down 3.3%. You're buying the metaverse and VR glasses as well. Well, those parts of Meta are not part of my thesis. But, you know, regardless, like if you could say, oh, well, Tesla's doing FSD and robots, which is so much cooler than metaverse and robot and VR, it's like cool, but the core business of Tesla is degrading and the core business of Meta is accelerating at a level we haven't seen in 10 years. So every part of a company is going to have some stuff you don't like inside of it. But you can't even compare the businesses in terms of profitability and operating income. Like obviously Meta is doing a lot better. Now Tesla probably has more potential, but the numbers are just not really there for it. As Tesla goes down 14% here, 320 has not been violated yet today. But we have to see if that ends up happening. Do you have the Google Cloud guy on CNBC? Would love to hear what he's saying. Do we short oil here? I don't know if oil's a short here. Like every headline we're seeing is implying oil is going to go. In fact, I feel like I should have taken more longs on oil over the past week. Like I'm seeing these headlines in real time with you guys while oil's at 78, 80, that it's escalating. It's just you kind of think in the back of your mind, well, it's not going to escalate that much. And then it continues to escalate, right? So it's one of those things where it's like all these headlines, maybe this is enough, but all these headlines are saying, no, this is going to go further. So maybe the short on oil is potentially a little premature. Here's Thomas Kurian, CEO of Google Cloud, talking about their cloud growth.
Now, Thomas, many people feel these different clouds are all the same. You obviously have offered something that the other companies do not have. Why are people going to you in flocking at amazing rates?
People are coming to us, Jim, because we have a vertical stack that is fully optimized all the way from chips to the models to the way that you can optimize the data that you feed the model efficiently, the security around the platform, and then the advances we've made with Gemini Enterprise, a core capability we offer for people to use AI tools and hook them up into their enterprise systems. And because we own and operate that entire stack, we've really been able to optimize it to provide great performance, great quality, and great differentiation.
All right, so Thomas, one of the things that's missing as we look at the stock, and I know this is your division, we're not going to talk about all the different parts of Alphabet, but one thing's certain, There is a notion that CapEx somehow has become a big waste. But when I look at your numbers, I would go to the CEO and say, I need every dollar I can, because if you give me a dollar, I can make a big return on that dollar. Can you explain to people that not all CapEx is equally bad at this point?
Yeah, we are very, very disciplined in our CapEx, because we amortize that CapEx as operating expense in our business. And in order for us to continue to maintain and improve operating margin, we have to take a unit of capital and convert it to revenue, and not just on a single quarter basis, but compound it over time. And so the way we are seeing that in our customer demand, people are buying our solutions. When they buy one solution, they're buying more pieces from us. They are seeing real returns. We've had many customers. Macy's, for example, has found as they deployed our AI system, it's improved the size of the shopping basket that they see. We've seen Macquarie Bank save a lot of processing time by automating many of the workflows in their organization. We are protecting 90% of the Fortune 100 from a cyber point of view, and we're seeing really good traction with our products and the revenue and operating margin that comes from it, that more than covers the cost of the capital we're investing. And we would not be showing top line and operating margin improvement without that.
Well, I'm glad you bring that up. I think there are a lot of people who feel the only people who are making money are the people who are offering a product. Those who are buying are not doing well. You directly contradicted that. And I think that's one of the reasons why many your cloud margins did reach a record 35.6%. But I think it's important to point out that Google is now paying for third-party capacity to bring customers on sooner. Doesn't that once again say, look, we have to do whatever we can to please our customers, including maybe something that hurts our margins, but we have so much demand, we don't want that demand to go elsewhere.
Exactly, Jim. When we win a customer, they stay with us for many, many years. And the margins that we get from them compounds over time as they increase their spend and as they use more and more parts of our portfolio. You know, a customer who uses our AI tools typically spends more than 1.8 times a customer that does not. And we have millions of businesses now using our AI tools. So for us, when we look at the short term, we're going to rent some capacity for a few quarters. It allows us to bring customers in, bridge them over to when we have sufficient capacity available, and then that will compound over time, and the return on investment makes sense for us. And that's why, because of this unprecedented demand, we are not just offering our own systems, but also renting capacity from some partners.
Now,
That's obviously bullish for the neoclouds.
Not like some of the verbiage I heard from analysts talking about Gemini Enterprises being much more of just another iteration of what everybody else has. It seems to me that's just not possible, not with these kinds of numbers. What do people want from Gemini Enterprise that is surprising and better?
First of all, we would not see the adoption rates we're seeing for Gemini Enterprise without customers getting value from it and without the differentiation that is seeing from it. So we always say customers are our ultimate proof point, and the fact that they're driving growth is an example. What's different about it? Number one, it gives people the ability to deploy AI at scale, automate processes across their organization. Second, it gives them the ability to control how they're using AI. For example, manage cost, manage security, manage compliance and audit. So we give them those controls. And third, it works with a broad collection of models so that you can choose the right model for the right use, but use a common platform to deploy AI across your company. And all three of these are what's driving the growth. Nearly 90% of the Fortune 100 now use it. And we have millions of smaller businesses and larger enterprises deploying it as well.
Could you give us some examples, maybe some classic, name some great companies that we know have come to you in order to be able to deal with your cloud product?
Yes, I mean, there are several. TELUS, for example, in telecommunications, is using our cloud to protect all of their systems from a cybersecurity point of view. Morgan Stanley is doing the same thing from a cyber point of view. Vodafone, they built a self-healing system to fix issues in the network by using our data platform and our AI tools to build an autonomous network. We've seen people, for example, the largest health insurer in Germany, Signal Iduna, has improved the speed of claims resolution by 37% and eliminated escalations and reduced escalations by 9 times using our platform. So there are many, many examples of this in financial services. Citi is working with us on a program called Citi Sky to help people get financial advice and access market research information using our AI platform. So there's lots of customers across many different industries using this.
Now, one last question.
All right. So, I mean, I don't think Thomas Kurian right there is making anyone doubt the velocity of cloud or why it's so important. It's just, once again, the market doesn't love his explanation of operating income versus margins and how they're ultimately affording the capex. But he's absolutely correct on, enterprises wouldn't be paying for this, as Google hits 316 right there, if they weren't getting value. They wouldn't get value if they didn't see the necessity of AI workflows within the enterprise. And then Google wouldn't be able to get a margin on that by charging for that value if customers weren't adopting it, which is what we're seeing with, operating margins go from 20 to 35 and revenue growth go from 20 to 33 to 82. It's just, it also feels like the most predictable sell-off, because if they're going to go negative free cash flow, then, they kind of have to go red, right? Which is why Meta's also in the gutter, but they also shouldn't be red because that cash flow is resulting in real growth. 601.40 on Meta. It hasn't gone below 600 today, but it feels like it wants to. DoorDash down 5% again. That 10-year and oil, not a good combination here. Today has obviously been a day to go more short than not. 737.93 as that's down 1.2%. Amazon's going red because of Google going red. Why is Nvidia down? That is a $5 trillion question that we ask ourselves every day, and that I don't fully have the answer for. Now, maybe Nvidia's down again because Google's making some of their own chips, but if Google's spending money, Nvidia should be going up. So at this point, the market, I think, needs to see proof from Nvidia before they take their earnings right back up. DoorDash still down 5, Meta down 4. I think we've got to be at fear on fear and greed, probably in the 30s. We are at 41 on fear. So we are in fear, but not in the 30s. Yeah, I'll be covering Intel after the bell. So we'll talk about Intel. Palo Alto's down 3%. So even some of your other software names are going to get Palantir getting smoked, even with ServiceNow having a good earnings, unfortunately. I think SpaceX is down, honestly. Well, high oil, bad for SpaceX. 10 years going high, bad for SpaceX. All of this is bad for high beta in general, right? Which is what SpaceX is. But I think Tesla going down is actually bad for SpaceX, just because sentiment around Elon's companies is bad. Now, I know SpaceX and Tesla don't actually have anything to do with each other in terms of the earnings, but sometimes they get traded together in the same bucket. SPY is still taking a hit. Yeah, I mean, this is the first 1.3. It's almost a 1.5% red day on SPY we've had in, I think, 3 weeks. We've had some ugly days on SPY, but not this ugly, because most of the pain was on SMH, right? You had financials, healthcare, everything else hold up the S&P for the majority of July, to be honest. The heat map today is actually still pretty green too. It's just because Google and Tesla are so much of the S&P, that's why it's falling. But industrials, energy, obviously today, insurance, financials, semis, healthcare, all of those are doing fine. SoFi is down 3 with oil going higher. Yeah, also, look, when a company trades at an exceptionally large price to earnings or price to sales, and then they have bad earnings, it tends to not be the best. Let's get a little bit more coverage on the Googs here. how the street is thinking of this decline.
Unprecedented demand and the advantage of owning the full AI stack. But Kurian's message, not turning shares around. They're down around 7.5% now. We saw sentiment initially sour on the earnings call last night when management said the capacity is so tight that it is prioritizing Gemini over outside cloud customers, and then raised this year's CapEx outlook to as much as $205 billion, with another significant increase coming in 2027. And despite its high margin ad business, Alphabet saw free cash flow flip negative in Q2, which was much sooner than analysts expected. The price target changes are reflecting some of that caution. Several firms held steady. Pivotal raised by just $5, while Piper, Cantor, and D.A. Davidson cut their targets as they modeled much higher spending and weaker cash generation. Guys? Getting hit today on all those concerns, I guess, down 7%. Thank you, Mackenzie. Tesla shares also sharply lower, more than 13% now. After earnings missed estimates, Phil LeBeau with more on the street's reaction to that one, Phil.
And the street is largely, Sarah, saying, have some patience here. We knew they would be spending a lot of money, and that's what you hear from the analysts today. Yes, the results are not there yet, but they believe that they ultimately are on track to be there for Tesla. Let's start first off with Morgan Stanley putting out a note saying, we view Tesla's accelerating CapEx cycle as a necessary investment to secure leadership in autonomy and robotics. JP Morgan out with a similar theme, lower estimates on large margin miss with investments ramping. Let's give you some numbers to put behind these investments. In the second quarter, CapEx spend was $5.79 billion. That's up 142% compared to the second quarter of last year. And remember, they've said this year they expect CapEx at Tesla to be more than $25 billion. Here's Elon Musk talking about CapEx spending on the conference call last night.
This is a massive CapEx year, but I'm confident that all the things that we're investing in are will yield incredible returns. Really, maybe the best CapEx returns that we've ever seen.
Let's take a look at shares of Tesla versus the S&P 500. A couple of things to keep in mind in terms of Optimus robot production and Cybercab production. Cybercab production will be ramping at the Gigafactory here in Texas. The Optimus robot production, they're putting in the production lines right now in Fremont, California. They expect that to begin later this year. But the bottom line is this, guys. If you were looking for proof points from Tesla, they're not there yet. There are some indications that they will ultimately be there and will ultimately pay off. But as of right now, they're not. And that's why the analysts are saying, have some patience. They still believe that Tesla will pay off.
Phil, appreciate that. Phil LeBeau on Tesla. IBM's the other big story, reporting earnings last night that were in line with the company's warning a week ago. Arvind Krishna joined us in the last hour. He said that only 2% of the software can be easily replaced by AI technology, despite wider fears that AI will make software companies irrelevant.
IBM still down on the day. The analysts that did come out on Tesla, they did say you have to be patient here, but they also lowered all their price targets, which is not really reflecting that patience. That's why it's always funny when the analysts try to give you any type of long-term analysis. It's like, dude, you will change your price in 2 seconds if you think something bad or good is happening. So, usually the analysts are very reactive, and a 13% decline means, why didn't you, if you knew the CapEx was going to be heavy, you should have lowered your price before the earnings, because you knew they would say there was a lot of CapEx. But if Tesla was up 14% today, they wouldn't have lowered their targets because stock's up. So the institutional coverage also, I think, is just as confused as many individual investors, because most of these names have just been in buckets that they can't really identify, including the software names, as NVIDIA continues to go down. Are you buying more Meta or Google? I have bought, I feel like, enough Meta this year. Meta would have to go back to the 550s for me to buy again. Google, I really haven't bought at all this year. So Google actually is kind of interesting. It's just not really been a main part of the portfolio, but seeing this below 300 would definitely get me excited. I don't know. I'm not buying Tesla. I haven't bought NVIDIA in a while. I think I've bought enough Meta this year. Amazon is the one where I don't even know, dude. Like, can Amazon really get to 280, 290, 270 if Google's stuck? Like, there's no way, right? I'm not going to let Amazon get that high if Google is in the gutter. So it kind of feels like that one's just stuck in purgatory, as Robinhood very close to losing below 100. Is Meta below 600? Are we there? We're there 2 weeks ago. Yep. 680 to 600 in 7 days. It's freaking crazy, dude. But that's what you got. 599.33. I mean, look, the street's right to take it. I mean, if the street's going to take Google down, they have to take Meta and Microsoft down and Amazon. There's no way those could diverge away. So now that we know this is the reaction going into earnings, it kind of makes the next big tech earnings seem less eventful or exciting because they're all going to say CapEx, Google low of day 315.70, and the street's going to be like, okay, cool, you want to spend CapEx? We're taking your stock down. But if they weren't growing, their stocks would also be down. So they're just in such a weird spot. I don't think Jersey Mike is IPOing today. If it is, it's kind of a crappy day to IPO. That is Thursday, July 30th. Okay, so next week. Trying to raise $1 billion next week. Are the queues down 2.6? Well, the queues are filled with all these tech companies. So it's not really the best for them if they go down. Tesla, $200 billion away from losing $1 trillion. As that one continues to get hit. Again, I think a lot of the Max 7 here, unfortunately, you have to tell yourself that these are names, they just have to be justified by being long-term investments. Because the short-term outlook is so grim because of the CapEx. It's not grim because of the earnings or anything like that. It's just the CapEx is the biggest issue right here. The semis aren't even that much up today. Marvell just flipped red. I think now it's affecting everything else. SMCI is barely up today. Where's Nebius? Nebius just went red. Wow, 230 to 217. SanDisk barely holding on. Micron was above 1,000. Now Micron's at 987. I mean, the semis are not off the hook here today. Microsoft 377. Goodness. Absolutely kicking her off a cliff right here. Oil is still up 5%. The Max 7 now are really, really feeling it here. I mean, that's a little nasty. That's a little nasty. AMD as well, also taking some pain, 540. The funny thing is we all knew oil would eventually become an issue, but I felt like people thought it would stabilize around at least the low 80s and chill out a bit, and it's just not. And because of the velocity of its move up, you know, it's hurting stocks. 10-year, are we higher than 4.7? We are indeed, 4.71. Every little move on this thing really does matter. AMD just lost 540. Robinhood looks like it wants to lose 100. Rocket Lab loses 67. Teams is down today. Yeah, there might be an issue because I do think Cloudflare was acting up today, which affected StreamYard. Oracle, we got to be below 120, right? Just above it. 10 cents above it, 4.59% down. Do you think SoFi is good at 1650? If you think oil is going to come down, yeah. Again, the thesis on SoFi in this macro is higher oil, higher rates, lower SoFi price. Lower oil, at least maybe not lower rates, but rates unchanged, higher SoFi price. And the market gyrates between that thesis every other day, which is why SoFi went from 15 to 19, back to 17, back up to 1850 last week, now back below 17. I mean, talk about a stock that's not trading on fundamentals. This is purely rooted, in my opinion, on interest rates and what that means for loan originations. Because all the other banks are doing fine, even in the midst of high rates and oil prices going up. It's not like Bank of America or JP Morgan are falling off a cliff here. But SoFi is a lot more beta than them. JP Morgan, yeah, it's down 30 cents today. Doesn't even care. So Microsoft's still down 3. Trying to see if there's any other major headlines. Yeah, every headline I'm seeing, Reuters, Bloomberg, Alphabet's future spending commitments soar. Alphabet's cash burn raises alarm for big tech as AI spending climbs. It's all CapEx fears, but too much CapEx, whereas last week it was not enough CapEx. I don't know, man. Feels stupid. Feels like a dip that will be bought given the type of growth they're putting up, but you also can't argue with investors. I mean, just like that Melius research guy said, right? Like, why would I want the Max 7 if I know they're not going to be putting up any numbers that are meaningful enough for me to get excited about? Why would I not buy the names they're giving the money to? Maybe that's how the market's rotating today. SpaceX still down 2.4. VIX is up a full 20% today. So first time in 2 years we've had Tesla down 14%. First time in about a month we've had VIX up 20%. The Tesla decline is more surprising than not. And that one's kind of nasty. Let's get an update right here on Moonshot and the fears around them distilling these American models.
Requests for comment. Bloomberg's AI reporter in DC, Maggie Eastland, joins us for more. It is a big accusation by Director Kratsios. It's a detailed post. Give us the reporting, the specifics of the accusation, what we need to know.
There are two key points here that this White House official, Michael Kratsios, is making. The first is that Moonshot, again, the maker of Kimi K3, access Grace Blackwell's. So those are NVIDIA servers, NVIDIA chips inside servers that Chinese companies are not allowed to purchase. So that was kind of the first accusation. He also said that they accessed those chips in Thailand as well as acquired them. And then the second accusation here is that Moonshot actually distilled from US models. Now, this is kind of like an emerging technique that Washington has been quite worried about, in which, the Chinese companies are using outputs from the US companies to then feed them into sort of copycat versions of the US products.
Bloomberg Tech has made every effort to invite Mr. Kratsios on the show because people have very simple questions. For example, they look at when Anthropic's Fable was released and then controlled by the US government, and when K3 was released, and say, well, how is that possible on the distillation side? Give us, I guess, the context then, the size and scope of K3, and then the distillation accusation a little bit more based on what Mr. Kratsios is saying.
Yeah, I think there's a lot of questions in DC and beyond around this, question of distillation and whether this is a real thing that Washington needs to be concerned about, right? Because Anthropic and OpenAI have been raising these concerns for the better part of a year, and essentially, some would still say that this distillation technique is perfectly fine. And as you point out, the time between Anthropic's latest release and the release of Kimi K3s is not that long. So some have pointed to that timeline and questioned, where's the evidence that this distillation is really happening? China obviously has a lot of, talent in the AI industry as well. So there's still, this lingering question of how much did Moonshot rely on US technology and how much is their own innovation?
Bloomberg's Maggie Eastland with a critically important report on Bloomberg Today. Thank you very much. Now, coming up.
Now, again, I don't think they're going to ban the open source models, but they're definitely going to try to make it harder for distillation, which, again, I don't know if it's possible to do, but that's not enough to calm the market's concerns. The worst thing about the distillation stuff is that, you've got Google spending all this money as Tesla hits a new low of the day right here, down 14.1%. And then the Chinese models undercut the money that Google's spending by distilling the models and then offer the same quality of the models effectively at a 90% cheaper price, which is not affecting Google's growth. I'm assuming it's not affecting Microsoft or Amazon's growth, but theoretically it could be a problem in the future, which is another thing you have to discount on those cash flows. On top of that, it could potentially affect OpenAI and Anthropic, which is also a different issue that the Mac 7 have to deal with. So, the China stuff is not good, but it also can't stop Google from spending CapEx either. Mamba says memory makers are showing ridiculous strength in this tape right now. All things considered, guess they already had their big drop. Yeah, I mean, for what it's worth, Micron was pushing very close to below 800 a few days ago. It's almost at 1,000 right here. It's still down from 1,250, but there's been plenty of time to DCA and potentially even be able to break even if you've had a high average on this name. Again, how low do they let how low do you let Micron go, or any of these semis go, when the Mac 7 are going to say that they're spending this much on CapEx? Because at some point, everyone can look at these stocks and be like, even if you think it's cyclical, goodness gracious, at some point, you got to end up buying these names. They're too cheap. But do the Mac 7 have to suffer because of that? AMD down 2% here as well. There is a new China memory stock, CXMT, in a few days. I don't know if the memory trade is concerned about that. Is Trump about to be live? Hold on. Is this an impromptu press conference here? No. Okay, it's not Trump. It's Carolyn Levitt. But looks like she's going to give an update on what's going on with Iran. But yeah, I don't think the Chinese memory stuff hurts the American memory name. Just given how much demand there overall is for memory in general. Here's a bit of an update in terms of what's going on at the White House here.
Our Eamon Jabbers has the latest. Hey, Eamon.
Hey there, Carl. Take a live look at the White House press briefing room right now. Caroline Leavitt, the press secretary, is expected to take questions from reporters in just a couple of moments. We'll watch that and bring you any news we get from that on all of these fronts we've been talking about this morning. But this morning, President Trump has been on social media threatening to expand the war in Iran to Yemen after Houthi forces there fired on 2 Saudi ships in the Red Sea, threatening to close another global oil bottleneck. The Houthis are widely seen as an Iranian proxy force, and they've stayed out of the war until now. So this gives the U.S. military now 2 strategic straits to worry about. The Strait of Hormuz, where traffic has been throttled since February, and now the Bab el-Mandab Strait at the southern end of the Red Sea, as you can see there. The president says on social media this morning, if they do this again, the U.S. will hold Iran responsible, in that the Houthis are a surrogate and/or proxy of Iran, and major military punishment will be inflicted upon Iran and, of course, the Houthis themselves, who I am very disappointed with, in that they have until now acted very professionally and smart. Meanwhile, Iran's Revolutionary Guard this morning said they have targeted another base in Kuwait, and they're warning Britain over that nation allowing American bombers to fly sorties against Iran from bases in the UK, guys. So a lot of moving parts here, but what we're seeing is an expansion potentially of the war, a contraction of oil supply in the global market, and that's what is driving oil prices that we're seeing this morning.
I mean, it'll be interesting to see whether Caroline confirms that the last we heard from the president that the Iranians were still desperate to come to the table to make a deal and have negotiations, whether that's still in play or not.
Yeah, I mean, the president has said consistently throughout the war that the Iranians are desperate to have negotiations and are begging for a deal. The Iranians, we've seen a lot of negotiations back and forth. Their actions don't seem to match that. For most of the past couple of months, the Iranians appear to have been feeling that they're in the driver's seat here, that because of their stranglehold on global oil supplies, that they have room to negotiate a much better deal for themselves, and the president seems to be willing to engage with. So the question here is, who's going to blink first? And so far, the Iranians have been willing to take an enormous amount of punishment, a lot of airstrikes. We're now on 11 consecutive nights of airstrikes against Iranian targets, and that does not seem to be diminishing their military capacity or their will to fight. So what else can the Trump administration do here? We'll see what Caroline has to say in a couple of minutes.
Okay, thank you, Eamon. Eamon Jabbers.
All right. that is your update in terms of what's going on with Iran. Obviously, I think the White House will continue to make the case. Oil, wow, 92.3. There she goes. That's really why we're seeing this market take a hit. The White House obviously is going to have to explain the oil increase and what their plan is to deal with navigating it. Also, we don't have any reserves in the SPR, Strategic Petroleum Reserve, to meaningfully unleash capacity and supply to deal with the lack of supply of oil. And that right there, that's your simple story for why stocks are red today, folks. Outside of Google, CapEx being theoretically bagged for the Max 7, Tesla down 15%. It's oil, that 10-year and VIX going up. That is what you got. And I think the White House is having this press conference. It's usually earlier than they do it. They must be doing it earlier today because they're seeing oil and they're trying to get ahead of the story of explaining to the American people why oil is going up and why we need to tolerate oil going up. 319 right there on Mr. Tessie. User, thank you for the super chat. Super chat because why not? Thanks for doing the stream today. Love you all. Hang in there. Appreciate you, man. Thank you for being here. Thank you for being part of the stream. Again, it's ugly, but what are you going to do, right? Anyone who's long Google can't be upset at Google's performance. You can't necessarily be upset that the market's taking down these stocks because the market's reacting to CapEx that is going to strain free cash flow. And then you really can't be mad that the market's upset that oil's going up and rate hike probabilities are going up and the 10-year is going up, because oil and the 10-year are two very important things that determine the equity market's reaction to the bond market. So it's not even like there's much to be mad about in terms of how these companies are performing. It's really this Iran war that continues to be the overhang on a lot of this stuff. I think that is it for me. We'll be back on the market close. We will have Intel earnings today after the bell. So we will get into Intel on the market close. We also have SAP, Deckers, Max Linear. Intel's the big one. We'll listen to the call. We'll talk about Intel. We'll see what we've got going on there. Kind of a crappy day for them to report, but that'll be important. Then you have AMD, which I will not be streaming, but in an hour, AMD will be live, and hopefully, we get some good results from AMD in terms of where semiconductor momentum is going. And then we'll keep going from there. Is Caroline Levitt actually live right now? Get a couple minutes of her commentary. Maybe we'll be able to at least get the White House's explanation for this. Let's see. Yeah, they're live. Okay, so let's listen to a couple minutes of what she has to say.
In company history, after the Trump tax cuts gave them the long-term certainty to invest with confidence. Winton Machine Company in Georgia is on pace for the best year in its history. Ketchy Inc. in North Carolina was able to purchase new machinery and expand its workforce by 25%. And Juergens in Ohio expanded its brand new facility to increase production. And they're also paying their workers even more thanks to the no tax on overtime provision. These are not just great statistics. These are American businesses with the confidence to grow, hire, and invest right here at home rather than offshoring their jobs. And a business opening or expanding in this country means more opportunity and higher wages for American workers. It means a chance for the American dream for young families. And it means restoring the belief that we can make and build things right here at home. This is what President Trump promised, and it's exactly what he is delivering with the help of Republicans in Congress. Democrats throw around the word affordability a lot, but when they had the chance to vote for the largest middle-class tax cuts in history, they refused. If Democrats got their way, it would have meant the largest tax increase in history, $4 trillion. 90% of Americans would have seen their taxes go up, and it would have been a complete disaster for our economy. That's the Democrat solution to, quote, affordability. It is raising your taxes. So I hope the press will cover more of the massive success stories resulting from the working families tax cuts and point out that single Democrat on Capitol Hill voted against every single comment but more money to the American people. Finally, on the energy front, after this briefing, President Trump will participate in a historic ratepayer protection pledge event at the EPA headquarters down the street. The president will expand the ratepayer protection pledge to governors, state legislatures, developers, and power providers to ensure that everyone involved in building and powering data centers pays their own way, instead of passing those costs on to hardworking families. The president will be joined by Energy Secretary Chris Wright, EPA Administrator Lee Zeldin, several governors who have already signed on to this pledge, and it has already proven to be remarkably successful. Nearly 200 additional stakeholders have signed on since developers, public power authorities, co-ops, and state governors. As a result, the pledge now covers 80% of all the power delivered to American homes and businesses. President Trump.
Okay, there is obviously too much lag, so I'm going to end it here, guys. I don't know what's going on today. I really don't think it's my internet. Maybe I have to restart my computer. I think this might be StreamYard or YouTube, but there's way too much lag here. Also, she's not talking about the Iran war. It's probably going to take her 30 minutes to talk about the Iran war because she's talking about all these other political stuff. So we'll see her comments later on the close. This report that we're getting from Axios, though, right now, Trump says he's close to decision on massive attack against Iran. Trump warns Iran will face major punishment for Houthi attacks on Red Sea shipping. Trump hinted at this yesterday, so it's not like this is new, but this is also part of the reason the market's probably taking a hit. Trump will be meeting with the energy secretary later today, so we'll get some updates on if they have any solutions to these rising oil prices. Trump stated Israel would join the campaign within 2 minutes if requested, as per Axios. U.S. officials and regional sources confirm diplomatic mediation has stalled, with Trump asserting Iranian leadership has not yet received enough pain to negotiate a deal. Resuming all-out war remains highly unpopular in the U.S., while Trump acknowledged that the Israeli participation would carry strategic consequences and potential Iranian retaliation. I mean, that's why this market's really taking a hit right here. If we are, now we're feeling it, folks. This is, we are feeling if we are going back to war, like legit, this is very similar to March, or at least the market's going to be thinking of it as very similar to March. That's actually what's happening here. So unfortunately, we're seeing the reaction right here in the stock market. We'll see by the end of the day if that changes. But even the semi is starting to flip a little red right here as oil and the escalation of war continues to be a bit more aggressive. All right, folks, we'll be back on the close. I know the lag is too bad. I'll do the word of the day on the close because this lag is getting a bit ridiculous, and we'll see if we can fix it as we get into the close. Thank you, everybody, for being here. Intel earnings after the bell. I'll see you guys on the close. Bye, everybody. Have a good one.